And the offices in Ghana and Republic of Benin, they were overseeing the activities in Nigeria. And in 2002, the office was reopened back in Abuja. And since then, we have been engaging in some activities. One of the activities is the training for the legislators. We believe that we need to support the legislative arm, because in 1999, after the election, most people who won elections and became legislators were ill-prepared for the office. They didn't have the required knowledge, they didn't have the skills, and so on, and they were presented with budgets. So they didn't do justice to the budgets, and most of the budgets were not, they were not very good. So we started training the legislators at the State House of Assembly. As of the last time we did the training, we did for 14 State Houses of Assembly, including Lagos State House of Assembly, Oyo, Ogun, Ondo, Osun, Cross River, Cross River, Imo, Plateau, and so on. So we did for 14 State Houses of Assembly around the nation. So apart from this, there is a radio program we run every Wednesday, 1 to 2 p.m. on Ray Power FM. Please, if you are chanced to have your radio near you every Wednesday, 1 to 2 p.m., tune in to the Vision Nigeria radio program. This radio program has been running since 2005 around different stations, but we reduced it to Ray Power in 2013. We were having 5 stations before. We consolidated, and we're now running it on the national transmission of Ray Power, 1 to 2 p.m. The topic there, or the essence of that radio program, is because we know that we cannot bring every Nigerian to the hall as we are seated here. But in order to reach many Nigerians with the concept of civic education, we have to bring it to the radio so that at your leisure, you can be able to follow discussions and trainings and issues on civic education in your homes. So we have been doing it since that period I mentioned, and I'm proud and bold to say there's hardly any international organization that has been doing such a radio program from then every week since that period till now. I don't know if there's any other organization that does it as CAS does. So we are proud to say that we are the only one who has been engaging in this non-stop from that time till now. I want to inform you again that we have the economic development programs that we engage in. Just last weekend, we finished a training in partnership with the Ministry of Budget and Economic Planning, BEP. We finished, and the Honorable Minister was in attendance for the program. And what did we do there? We brought together all the commissioners of budget and planning from all the states across the Federation. We brought them together, one, to brief them on the current stand of things. They have to liaise with the Federal Ministry of Budget and Economic Planning. And we introduced some new ideas, especially on AI, how they use AI to monitor their budgets, and so on, and how they use AI to plan their, they do their planning. So we did this for 2 days. This is not the first time we are bringing them together. We started since 2021 to be bringing them together every year to meet with the federal ministry. Of course, they meet the ministry at a different program, but CAS program is different from the normal one they meet. So we bring them together to do this. And as we believe in this economic development, we started in 2020 a series of programs where we bring all together the special advisors to ministers across the Federation. And we introduced the National Economic Plan to them so that each ministry will be planning whatever they are doing with other ministries, because we noticed that all these ministries were functioning in silo. they were doing their own thing, not in connection with the other ministries. So we now brought them together to network and all of them to be on the same page when they are planning from their ministry, and then to now share data so that the economic plan will be successful. So we are proud that I think we are the only organization that has done this so far in Nigeria. So we do other things like what we call security sector reform. This may not be very relevant to you, but I think it would be good if I just introduce one of the things we have learned in this sector. You will agree with me that many security agencies in Nigeria, they always have conflicts, and you see them always fighting, and you wonder why we have so many security agencies doing the same thing. The problem we found out was in the establishment acts of these agencies. In one establishment act, you will hear, notwithstanding whatever is in any other act, you shall have the mandate to do so in one act. Then you go to the act of another agency, and that one will open and say, notwithstanding whatever is in another act, you shall have the mandate to do so. And then, when you have issues, the police will come, they want to take charge. The road safety will come, they want to take charge. NSCDC will come, they want to take charge. DSS will come, they want to take charge. And everybody will be claiming, we have the right, it's under our domain to do this and so on. Then they start having issues, and then we have had cases where they draw guns and we're pointing guns at each other and say, this is my home terrain, you don't come near, you don't do this. We engaged some consultants around 2021 to look into these acts, and we compiled them together and we introduced to all the security related committees of the National Assembly. We brought them to Sheraton Hotel in Ikeja. We introduced the bills to them, and it was very strange that some of them were getting to know that the laws passed by our National Assembly is contributing to all these conflicts we are having. So after that, CAS now supported that those acts should be amended, which they agreed to. So they tried to amend the act, and they put in through the last legislative period, but it could not say through. They passed through the House of Representatives, but they have not been passed in the Senate. So we are in the process of following up that these bills are totally passed. So in the next 1 or 2 weeks, we are going to have another engagement with the National Assembly, where we are going to review some existing security-related bills, and then we will talk about those ones that are pending, and we will see how we can pass all this so that we can reduce conflicts in our society. So on this note, I want to say, I don't want to take much of your time with the activities we do, but I can assure you that we do more than 50 activities per year. So if I start mentioning them one by one, we will not leave here, we will not finish the opening ceremony in the next 1.5 hours. So on this note, I want to say thank you very much and welcome back. Welcome to this workshop. And the country representative, Dr. Tobias Rutershoff, he sends his greetings, and whatever we can make use from this, we appreciate if you can make good use of them. Thank you very much. So I would like to call on Ms. Maureen Idilso, the Board of Trustees member, Turnaround Management Association, Nigeria, TMA, Nigeria. Please, a round of applause for her as she comes forward.
Good morning, everyone. Please, another round of applause for Mr. Adeniran and Cass Conrad. I don't want to mispronounce the name. Adeniran, stiff tongue. It's really nice to have you all here. You're welcome on behalf of TMA. I'm sure very soon you'll hear a little bit more about the Turnaround Management Association, Nigeria branch. We have our president here and a number of members, and then also all the people who have come, partners and potential partners. So you're all welcome. I'm going to be anchoring this program today, and for the rest of the day, we have a number of activities, we have panels, you all have the programs. So without wasting more of your time, because we've started quite late, I'd like to welcome Mr. Nazir Haliru, the Director General, Kano Investment Company, if he's here. He's not here. Okay. Is there a representative from Bank of Industry for their opening, or their goodwill messages? No. Okay. Cynthia, I'll now go on to Cynthia. We've heard about what Conrad, sorry? Is BOI here, Bank of Industry?
Do you want to speak now with Dr.
No, please come on.
Dr. Esa is online.
Please check.
The media people.
Who is handling the Zoom connection, online connection? Can you project the Zoom link? Sorry, Dr. Steve, can we project them so that the people in the room can also see them?
The media people, can you project the... Okay, please come and do it. Bring the laptop. Okay, they'll do it from there.
Okay, while we're sorting that out, I'd like to invite Dr. Stephen Ogidan, the president of TMA Nigeria, to give his own welcome remarks to you. Thank you.
Thank you, Madam Morin, the BOT member of TMA. On behalf of TMA Nigeria, we want to especially thank CAS for this wonderful opportunity they have given us to partner with them to have our stakeholder engagement and a workshop for 2025. As Madam Morin has pointed out, Turnaround Management Association is an association with the headquarters in the United States, and we have only 2 chapters in Africa. All over the world, TMA has about 350 chapters. The 2 chapters in Africa is Nigeria and South Africa. And South Africa chapter has been on for more than 20 years. So Nigeria chapter is here for about 3 years. So we thank CAS for partnering with us to build capacity of our members in a way that we will be able to contribute to free economy, we'll be able to contribute to employment creation, and we'll be able to contribute to turning enterprises around. Generally in Nigeria, when banks give facilities to organizations and the organizations struggle to repay, the challenge has always been, how will the lender get back their money? And the most easy things most lenders do is to liquidate. But Turnaround Management Association came in with the idea that, look, you don't liquidate a facility and let people lose their employment. So what we do is to turn around the organization, make it healthy. It's like people getting sick and you are rushing them to the mortuary. And we say, no, we'll first treat them. When we treat them, the organization will rebound back, and then we should have a culture of selling enterprises. then when you want to sell, it now becomes a better system. The staff will not lose their job, the investors will not lose their money, and the economy will continue to bounce better. We thank the Managing Director of Bank of Industry for nominating the members who are here. We are expecting 14 people from them. We also thank ICANN and all our partners who have contributed to this, to our being here, and we wish us all the best, and we assure you that the presentations we are going to have today and tomorrow will be enriching, and you will be able to do your job better, and you'll be able to appreciate what TMA is doing in Nigeria, in Africa, and all over the world. And those who are interested in joining the association will give you forms, and will give you the guidelines, because there are some tools that we got from the international headquarters that we share with our members on how to assess the health of enterprises, how to turn enterprises around, and how to be better managers for the enterprises we are running with. We thank Dr. Dike, we thank all our facilitators, we thank Dr. Agai, all those who partner with us and contributed to bringing us here. Once again, we recognize Conrad Adenauer Fund for supporting and partnering with us to have this event in Lagos. God bless you, and welcome once again. Over to you.
Thank you very much, Dr. Steve. Another round of applause for him, please. Are we now ready to have BOI, Bank of Industry? Okay. So can we have DG, Director General, Kano Investment Company, Mr. Nazir Haliru? Audio.
Yes. Hello?
Hello? Hello, can you hear me?
Yes.
Yes. Hello, am I audible?
Yes, you are.
Yes,
DG.
you are. Okay.
Recording stopped.
Yeah, thank you so much. Good morning, everyone. And then I want to, first of all, register my sincere apologies for not being able to join you in person. It seems like there's an echo. I don't know whether it's from my end or it's also from there. Hello, can you hear me? Hello?
Are we good to go?
Hello, am I audible? There is an echo from my end.
Okay, DG, I think we can go ahead.
I can go ahead now.
You can go ahead. DG.
Hello.
Yes.
Thank you so much. Yeah, I would like to, first of all, like I said, register my sincere apologies for not being able to join you in person. Apologies due to other commitments. But Kano State Investment Promotion Agency, and by extension Kano State Government, is very glad to be invited by TNM to this conference. And we are so much opportune and then also willing to extend our handshake of partnerships and collaboration in order to see how Moribund assets in Kano, especially the industries, can be revived. You may wish to know that Kano State Investment Promotion Agency is open for business, is also open for collaboration and partnership as far as investment is concerned. Just recently, last 2 months, we conducted a large geospatial mapping of all industries in Kano. The essence is not just only to know the amount of investment in the states and also know and needs by these industries, but to also know how many of those industries are moribund. And we've identified over 1,000 industries that are moribund in Kano. From the total that we've gotten, nearly over 3,600 total. So 1,000 plus of those are moribund, and this speaks volume around why this is very relevant to us and why we need to work with all relevant stakeholders to see how best we can revive these industries for the best interest of the state and to also contribute to our economy. The Kano State Governor, Alhaji Abba Kabir Yusuf, is looking forward, to working with all relevant stakeholders, especially as we commence with the Bank of Industry to see how this asset can be revived. So, thank you so much for this opportunity to join you online, and I will be looking forward to more fruitful conversations going forward, and we'll be willing to collaborate for that to achieve.
Thank you, DG.
Another round of applause for him, please. Thank you very much, Director General. At this point, I think we should just give a round of applause and welcome to all our participants online. I appreciate you all, and we're very glad to have you in the room. And I think as soon as I know the exact people who are there, which organizations you represent, I'll call you out and thank you acknowledge you for everyone to know. But we are happy to have you all here present. Is Bank of Industry ready now? Okay. All right, thank you. So, I think the last speech from the DG just emphasizes why this stakeholder meeting is important. This annual stakeholder gathering is important, and also emphasizes the link that we have, TMA, the connection between us, CAS, the people we have invited, the Investment Corporation, 1,000 organizations and moribund in Kano State identified at the moment. So there's a lot of business, there's a lot of work to do, and we can see that when these organizations are working, there's more empowerment, there's more jobs, and of course there'll be less insecurity and all other issues and indices that disturb the environment and the country. So without saying much more, I'd just like to invite, you've heard a little bit about what TMA does from the President, but we would invite Ms. Cynthia Ofodile to give us the objectives and goals of turnaround management. So please let's welcome Cynthia with a round of applause.
Good morning, everyone. Distinguished guests, ladies and gentlemen, it is my pleasure to speak on a subject that sits at the very heart of our gathering today, the objectives and goals of turnaround management, and its role in Nigeria's economic recovery journey. Turnaround Management Association Nigeria is a professional association concerned about business rescue and turnaround in Nigeria. TMA's strength comes from its diverse membership, professionals from many disciplines committed to a common goal to stabilize and revitalize corporate value, and our members also come from diverse backgrounds, including bankers, lawyers, entrepreneurs, academics, and more. TMA Nigeria is the local chapter of the Global Turnaround Management Association and aims to serve its members by encouraging thought leadership, guiding legislative projects, and helping members to equip themselves with the skills and knowledge necessary to offer competent interventions and advice to ailing enterprises, including state enterprises. TMA Nigeria members are a professionally certified community that seeks to help strengthen the Nigerian economy by working to save distressed businesses, assist management to navigate off-plan events, and help healthy companies avoid similar pitfalls. TMA equips its members by providing networking forums, educational resources, and certification for professional competency, whether they practice at the local, regional, or national or cross-border level. TMA ensures that the critical role our members play in the global economy is understood, respected, and celebrated. At the core of turnaround management lies one essential mission: to restore value, renew performance, and rebuild confidence in struggling or distressed organizations. It is a discipline rooted in resilience and transformation, one that turns challenges into opportunities and failures into sustainable success stories. A worldwide community of professionals who drive business to individuals who work with companies to increase enterprise value, preserve equity, manage disruption, and drive significantly improved results. The Turnaround Management Association, TMA Nigeria, is guided by clear and compelling objectives that align with this mission. First, we aim to cultivate and promote the professional of corporate renewal and change management, elevating the expertise of professionals who specialize in business restructuring, recovery, and transformation. Secondly, we serve as a forum for collaboration and knowledge exchange, bringing together professionals from financial advisors and lawyers to consultants, regulators, and policymakers to share experiences, innovative ideas, and global best practices in turnaround and restructuring. We also seek to uphold the highest standards of integrity and professionalism, ensuring that the turnaround management industry in Nigeria remains credible, ethical, and impactful. Another core objective is to educate the public and the business community about the importance of corporate renewal and responsible change management. We believe that awareness and understanding are the first steps towards rebuilding a resilient economy. Furthermore, TMA Nigeria is committed to continuous professional development, creating training opportunities, seminars, and workshops that enhance the competencies and leadership skills of turnaround professionals. We also strive to foster collaboration between the public and private sectors, academia, and development institutions, as we recognize that sustainable recovery can only be achieved through partnership and shared vision. Lastly, we aim to promote the image of TMA International and its Nigerian chapter as the leading professional community dedicated to corporate renewal, and to position our members as trusted experts in business recovery and turnaround management. In essence, our goals are not merely organizational, they are national and transformative. They speak to a Nigeria where failing enterprises can rise again, where innovation replaces stagnation, and where strategic turnaround becomes a key driver of the economic growth. Ladies and gentlemen, as we deliberate over the next 2 days, let us reaffirm our shared commitment to these ideals, to build stronger institutions, rescue distressed assets, and contribute meaningfully to the revitalization of our economy. Together, we can redefine the future of corporate renewal in Nigeria, and together, we can turn setbacks into success stories. Thank you.
Thank you very much, Ms. Cynthia Ofodili, Executive Secretary, Turnaround Management Association, Nigeria. Another round of applause for her, please. And for our members online, or our participants online, please drop in the names of your organization in the chat box and we can recognize you accordingly. Now I would like to take some question and answers. And during that period, for those in the room, if you want, you can proceed to the desk at the back for your tea break. We'll just make it a long walking tea break because we're trying to catch up on lost time. So questions and answers, please. We can take from the room and we can take from online, from our participants online. It's a hybrid workshop or session, as you know. So we have to get everybody in. Victor, can you help me if there are organizations online that we need to give a shout out to? Okay. Please check. You're welcome, Mohammed from Dutse. I missed out on the Put on the chat box. Victor, welcome from Successful Nigeria Limited. Olayinka from Sagacity, you're welcome. Sagacity, the Ecosystem Limited, you're welcome. Any questions online in the room? Hassan Gambo, MD, Hastab Multi-Businesses Nigeria, you're welcome. The kind of names we want to see. Thank you, Olayinka. Much appreciated. Hafiz Ibrahim Bello from Greenbox Technology, you're welcome. Chana Edward, Processory, you're welcome. So we have 31 participants online. Rosemary, Processory, you're welcome. Ekaite Omo, Phonics Women Leadership and Development Initiative, you're welcome. Okay, so we're ready. We'll continue with the welcomes later on, but now we're ready to take the presentation from the president of Turnaround Management Association Nigeria, MD CEO, Successful Limited, and that's why we have a lot of them online. Turnaround management as a tool for economic prosperity in the face of global headwinds and local economic uncertainty, a case for local company transformation. Please, once again, let's put our hands together for Dr. Stephen Ogidon.
Thank you very much, Madam Mori. And media, I hope you are sharing. Okay, thank you. I can go there. I hope you are going to share the slides with those online, and then you can project and you are okay? Fine. Good morning, distinguished ladies and gentlemen. And this morning we'll be talking about turnaround management as a tool for economic prosperity in the face of global headwinds and local economic uncertainties. Yesterday when I was driving into Victoria Island, no, in the morning yesterday I was on Channels TV, I was watching Channels TV, and I saw that Nestor Oil has been taken over because of $1 billion debt. Then when I was driving into Victoria Island, I saw the headquarters of Nestor Oil, and I saw the markings on the building and everything. And I just shook my head because whether we like it or not, 1,500 jobs were on the line. When you look at that building at the junction there, and you see $1 billion, and you see the number of people that are going to lose their job, that is the first thing. And Nestor Oil couldn't have gotten to that level. For Nestor Oil to get to that level, something must have been wrong. Sometimes it could be as small as management inefficiency. Sometimes it could be as small as global headwinds that you are not prepared for. And sometimes it could be as small as doing nothing. Like Kodak will say, that we didn't do anything wrong, yet we lost. So sometimes we just doing nothing again could be the crime that makes your systems not to work the way you have projected. I'm sorry, 1 second. Good. So in this presentation, we'll be talking about the challenges that organizations face globally. In this context, business as usual is a recipe for failure. That could be one of the things that happened to Nestor Oil. 80% of SMEs in Nigeria fall within 5 years. And this we know. And the figures are there. On Tuesday, I was privileged to be part of the BOI ESG report launch, the first conference on ESG. So organizations are looking beyond the question of just, are you making profit? They are looking, what is your take on the environment? What is your take on social issues? What is your governance level? And I was really impressed by the panelists in the BOIF conference, because many people discovered that when they are socially responsible, profit will run after them. And the moment you are not socially responsible, even when you are making profit, you are making the profit on a short term. And manufacturing capacity utilization is hovering around 55%. And non-performing loans on banking sector is exceeding 1.3 trillion naira. And youth unemployment reaches 33.3%. And when you look at the demography of Nigeria, as of today, more than 65% of us, 220, 230 million, more than 65% are under 40. So you see there is energy, there is opportunity, but they are getting unusually worried about, is the workplace, is the industry ready to absorb this energy? And history teaches us that periods of greatest disruption often catalyze the most significant transformation. And the Chinese word for crisis combines character from danger and opportunity. And this is the philosophy of turnaround management, that whenever there is a crisis, opportunities are there. Are we going to allow these opportunities to go to waste? What benefit are we going to do? And turnaround management, if systematically applies across Nigerian enterprise landscape, can transform our current challenges into catalysts for unprecedented economic prosperity. And this is what we are saying, that instead of allowing organizations like Nestor Hall to be taken over, why not change the management? Why not put a better team in place? Why not change the business model? So that 1,500 people will not just lose their job. And this is the outline of my presentation. It's as shown on the screen. You are going to be given a copy of the paper. And so it will detail out everything. And turnaround management in Nigeria context transcends between the traditional model, and it encompasses crisis stabilization. Whether we like it or not, every organization will go through different phases. There will be the growth stage, there will be the challenging space. I was privileged to lead a team that was doing a study on restaurant businesses in Nigeria. And we discovered that in the entire northern Nigeria, there are only 4 restaurants that have graduated from the first generation to the second generation. In southern Nigeria, only Jevnik has moved from the first generation to the second generation. And you now keep on asking questions, what went wrong along the line? Biobak has moved to the second generation. Mama Cass moved to the second generation and lost the focus. They opened London branch and abandoned Nigeria branch. 805 has not moved to the second generation. How come? Then when you get to Iloni, you discover that Iyamala place has got to the 4th generation. The people that did not go to school, their businesses are going to the 4th generation. You go to Ibadan, Mama Soji, Mama Okpe, they are in the 3rd generation. I served in Ibadan in 1999, 2000. And the last time I went to Ibadan, early this year, I went to Mama Soji restaurant. Mama Soji has retired. Soji has taken over. Soji is retiring, and his daughter is taking over. So how come those businesses were moving and they were doing very well? And Mama Soji told me that Soji started as a plate washer in the restaurant, and he got the business. Then you look at Shagalinku. Shagalinku is trying to transcend to the second generation, but the children are not interested. Shagalinku didn't go to school. The children went to school. The children that went to school did not want to take over the business. Biobak went to school. The second generation of Biobak was my student in business school. And she was prepared to take over the business. And she's expanding the business of restaurants now to go to hotels. Shagalinku business model is a combination of restaurant and supermarket. So we need to see and examine all those issues. Then strategic repositioning. How do you reposition your business? Since COVID, I have not seen one organization that continued the same business model pre-COVID and post-COVID. Things must change. Primark in the UK collapsed, and they only came back under a new management because Primark said we are low-cost produce people and we are for low-end people. Our customers are not online. Marks and Spencer said our customers are online. And when COVID came, the moment you are not online, you have lost it. And that was why Primark collapsed. Lost 16 million pounds within the first year, 2021, and they were only able to come back in 2023 because they gave the enterprise to turnaround managers. Then you look at operational excellence, financial restructuring, stakeholder management, and capacity building. So all those are the issues and tools that we'll be talking about. Let us understand the current context, the global economic landscape. In understanding the current context, we need to see that COVID-19 pandemic accelerated structural changes that were already underway. When COVID-19 took place, we were told and we believe that pandemic comes once in 100 years. Before COVID-19, it was this flu of 1919 and 2020 and 2021. But with technology now, we can be certain that the next crisis will not wait for 50 years. It will come before 100 years. And so organizations must be able to position themselves. Then digital acceleration, 10 years of digital transformation in 10 months, the kind of transformation we have seen in enterprises. If technology is not working for any enterprise now, it is already working against the enterprise. So if you are not digitally inclined, if you are not online, if you are not using technology to advance your business, the business is not likely to succeed. Then supply chain reconfiguration, from efficiency to resilience. It's not just a question for you to be efficient, you must have resilience in the way you do it. And then you must be able, the paradigm shift, remote work became permanent. Last night, one of my friends was with me, we were talking, she told me that she has lost 27 of the staff this year alone. And she was asking me, what did I do wrong? I said, you know what, when you get back home, give me a page. I want to see those staff that have gone, date of birth, date of joining your organization, and date of exit. When she gave me, I just replied, I said, your problem is simple. These people who left your organization, they are the Gen Z. They are not ready to stay in the office, they are not ready to work. So you must be able to now see. So you now need to see that when you are employing, don't employ people from the same generation because you are going to have that conflict. The Gen Z are even better. The next generation don't even want to work at all. The Gen Z wants to work from home and they don't want to be, and when you shout on them, they will tell you that it's affecting their mental health. And then you have to beg them to be able to work with them. Yes. So consumer behavior is changing. E-commerce, health consciousness, and sustainability. And before we go to the next geopolitical realignment, I want to suggest that we just have a 5-10 minutes break to take our tea and do some health stretch so that we don't sit for too long. If you agree, say hi. The ayes have it. That's how they vote in National Assembly. Thank you very much. Let's go for our tea. Thank you. Those are our colleagues online. We want to do health break for 10 minutes and then we will come back to you in 10 minutes. Thank you very much. We just take our tea and our snacks, then we come back to the table. Thank you very much. They are projecting. Yes, we are talking about the geopolitical realignment, trade wars. We have seen the trade wars between China and the US. We have seen the technology, the coupling separate tax ecosystem is, I imagine, then resource nationalism, country prioritizing domestic needs, then climate pressures, transition costs, and other opportunities. So with all these things, financial market volatility, interest rate cycles, currency fluctuation, inflation persistence, and credit tightening. Most of the time, even when we assume that we are doing well, that everything will be okay, a cough from other sector will affect. As we are taking our tea, Dr. Dike was just calling my attention to the Nestor Oil example that we just cited. We thought that it's Nestor Oil only that is having problem. He was just telling me that insurance people may have problem because Nestor Oil has a lot of assets they have insured. And they will be making claims from the insurance company. So you can see how one sector is affecting the other. So it's not only the financial sector, insurance sector, all of them will be affected. Then Nigeria's economic realities, as it is, when you look at the macroeconomic challenges, exchange rate instability, we thank God for the kind of stability we've had at least in the last 1 year with the dollar. Even when it is high, it is stable. You can plan, you can predict what is going to happen. Then inflation pressures, fiscal constraints, infrastructural gaps, and whether we like it or not, infrastructural gaps will continue to still happen because we don't have enough and we don't have all the money to do it. Then import dependency, informal economy, regulatory burden, and skill mismatch. With all these problems, what are the options? The opportunities are also emerging. Demography, we've mentioned the youth population, natural resources, regional integration, and technology adoption. So as we look at the youths, as we look at what they represent, we must be able to see the limited knowledge they have. In a political setting, we are discussing about the question of democracy or no democracy. Somebody now called my attention to the fact that, look, we said that 65% of Nigeria population are under 40. And when they broke it down again, they said 60% are under 30. So one thing you see clearly is that those 60% that are under 30, one thing you know is that they did not know military rule. Because this, our democracy has been 26 years. So they were 4 years under military, so they can't understand, they cannot see it, they don't know. So you must be able to manage them, to tolerate them in the workplace. Then the regional integration, AFCTA, and technology adoption. What are the convergence effects? Cost pressure, imported inflation means local inefficiencies. The interaction between the global headwinds and the Nigerian challenges creates unique pressure for Nigerian businesses. Then there are market disruptions, fiscal stress, and operational complexity. And if we look critically at this convergence, it demands sophisticated response, precisely what turnaround management provides. From the conversation that took place on Tuesday in the BOI ESG conference, one thing that I picked clearly in the fireside chat was the fact that if your governance is not strong, if you are not conscious of your social and environment, your business cannot last. And organizations that have very strong governance, they tend to be able to do things right. And it is one thing as turnaround managers we must put in place. Most of the time, when enterprises fail, we are always in a hurry to look at the financials. Financials is the least. Governance is the first. Because most organizations that will fail, it is from governance level. And we can keep on citing examples where we have seen that we did not have a non-disclosure agreement. Look at the crisis between Dangote and Pengassan. And when you listen to Dangote interview, he said in the last 8 months, there has been 26 attempt sabotage from within. And we were only able to pinpoint this because of our strong governance. So if the strong governance is weak, you will just discover that machines are breaking down, you don't know who is doing what and how. And you must be able to see. So turnaround management beyond crisis intervention. Where are we coming from? Historically, traditional view of turnaround management is saying that It's an emergency intervention for failing enterprises, cost-cutting and asset stripping, short-term focus on survival, and financial engineering prioritized. But in modern day, the modern turnaround has gone beyond the traditional view. What we are now seeing is that you must look at the business holistically. Transformation goes beyond financial fixes. If the governance is bad, if an enterprise has poor management, even when you give them the entire budget of Nigeria, they will run at a loss. That was why British Airways in a particular year did business with 20 billion pounds and they ran at a loss. It was when they changed the management that they now discover. And what was the quick fix that the management did? They tried to reduce the food and everything they serve on the flight. And because they know those are the leakages where the money was going. Then sustainable value creation, long-term viability focus, and stakeholder capitalism, balancing all interests, and innovation integration, then capability development. And this is what is weak in Nigeria. We have not imbibed the culture of turning enterprises around. It should not be a crime that an enterprise is failing. It is when we don't do anything about it. In the last annual conference of Turnaround Management International, the Global, that took place in New Orleans, most of the sponsors, the companies that sponsored the event, these were the companies that they were able to turn around in the last 1 year. So opportunities are always there. Enterprises that are turned around, they have opportunities to create better, to contribute better to the economy, and they are able to do better. For strategic clarity, what are the core principles of effective turnaround? Diagnostic excellence, 360-degree assessment, financial, operational, and market organization. Then we use root cause analysis beyond symptoms to fundamental issues. What are the fundamental issues that are making enterprises not to do well? Then you do scenario planning, multiple future pathways considered, then quick wins identification. We need to build momentum. When we talk about the example of restaurant businesses in Nigeria, why are they not surviving? And it is not because the recipe was not good. It was governance. Because the mother who started the business did not put structures in place for the children to be able to learn, and they want the children to take over the business. And if you want your children to take over your business, you must be able to bring them in very early and learn from on the job. Strategic clarity, vision articulation, competitive positioning, resource allocation, and innovation integration. I give you a practical example of one of the enterprises we supported in Port Harcourt. And because we have done a case study on it, I will mention Labake Hotels in Port Harcourt. The issue with Labake Hotels in Port Harcourt, you know the hotel. You see, I have a friend in Port Harcourt. He's a pastor in Redeemed Church. Most of the time when I go there, it was my classmate in ABU. So when I go to Port Harcourt, he will come and visit me. So that day now, he now said I should follow him to see his church member, Chief Labake. He now said, I said, why? He said, the man is an elderly man, he's a multimillionaire, he has this hotel business and everything. So when we got there, the man gave us food, he gave us drink, everything was okay. As he was seeing us out, he now called my friend aside. And as a gentleman, I excused them to discuss. My friend said, no, come. I know he wants to discuss business, and you may give me an idea. When we talk, then the man now says something. He said, Pastor, you know I'm not a happy man. He said, why are you not happy, Daddy? He said, they are from Ado Ekiti. He said, my son came home from South Africa. The son is a pilot with South African Airways. He said he went to Ado Ekiti and put for sale in his house. All neighbors were now calling him thinking that he was broke. He said, is that why you are not happy? He said, yes. He said, you know what? We cannot just judge this case. Let me call your son and ask him what went wrong. This man has 3 children. One is a pilot with South African Airways. The other is a medical doctor in Canada. Another doctor in America. The one that put for sale in the house is the pilot. He now said, why did you do this to Daddy? He said, Daddy didn't tell you the truth. He said, this house has 26 rooms. The only time Daddy and Mommy go to Ado Ekiti is during Christmas, December 24, and they only stay in one room. The driver will stay in another room. He said 23 rooms in that house for 3 years. Nobody opened the door to check what is happening. He said this is a wasting asset. He said, we want to sell it so that we can build a 2-bedroom bungalow for them to be their holiday home in Ado-Ekiti. He said, Daddy, how do I graduate from 26 rooms to a 2-bedroom? He said, Daddy, you are already 74. You are waiting, you are in the departure lodge, and anytime God will call your flight, you will go. Then the man now said another thing. He said the worst of all was that the boy refused to come back home to come and be the managing director of Labake Hotels. So when we were not talking, he said, when my father was sending me to the best flying school in the world, did he send me so that I can come and become food and beverages manager in hotel? He said, my excitement is to fly, and I'm already flying planes all over. So when we now started talking, I now told Chief, I said, Chief, you know the problem with your business. It is your business model that is faulty. He said, because we are colonized by British, we have a British mentality. We think that our children will inherit our business. These children are not interested. They have their own excitement. He said, what do we do? I said, you know what? Change your business model from British to American. Instead of having a managing director, chief executive, you should have executive vice president. When we are going to recruit from outside, not from your family, then you will now be president, but not executive, and be signing and then doing everything. We now told the son that, are you ready to be the president of this company and stay in South Africa and still be flying your plane? He said, yes. He said, so long as I don't come to sit down in Port Harcourt. You know what the father now has? He said, in the letterheaded paper, are they going to put his name as the president? He said, yes. He said, that's all I wanted, so that my name will not go just like that from this business. So he said, okay, you will come to Nigeria 3 times a year for board meeting. He said, that is okay, I'm ready to do that. But for me to come and sit down and say, approve, not approve for Coca-Cola, I'm not ready for that kind of nonsense. So you need to be able to understand the thinking of this generation. They are not interested. A business that will survive, a business that will thrive very well, family members may not be the one to inherit. The chief operating officer of Dangote Refinery is an Indian man. It's not Dangote's daughter. So you need to be able to get the best people to run the business for you. Then execution discipline, project management rigors, performance tracking, change management, and risk mitigation. So the Nigeria adaptation, we need to look at it. Turnaround management requires cultural and contextual adaptation. You must be able to understand the different stakeholders, what is in it for them. Chief Labake is not interested in money. He has already made money. He just wanted that tradition to continue, that after me, this business is going on, and then my family members are there. Then extended stakeholders network, family, community, traditional institution. Another business we turn around in Kaduna State is honey business. And this lady was my student in business school. The father started the business. After the father's death, the mother took over. So when this girl left the business school, after graduation, she took over the business and retired the mother. And then she now said, then the brother also is a pilot. So they all agreed that the lady should run the business. But discipline was breaking down in this honey business because they wanted to go into export. Because majority of the staff that are working in the business were recruited by the father. And so each time this young girl of 25, 26 is talking, the staff will say, I was there in your naming ceremony. You cannot come. This is not how we started. But he said, no, this was not how my father started. But in this age and time, we must change this orientation. We must change all those things. And if she talks in the office, then they will go to the house and talk to grandma. Grandma will call her and say, you don't know where your own children will be tomorrow. Please allow them. So discipline now broke down. Until we now say, you know what? Change your governance structure. Anybody that is older than you as managing director, don't employ. Those people who started this business with your father, who attended your own naming ceremony, retire them, so that the business can continue. Until when she was able to do that, it went fine for them. Then there is resource constraint, frugal innovation, local solution, collaborative approaches, and government relation. Then social responsibility, employment preservation, community impact, environmental consciousness, and youth empowerment. So global headwinds and the challenges and opportunities that are coming. We have supply chain disruptions. And within the supply chain disruption, you discover that the cost of containers have gone up by 500% at 500% at peak, port congestion, semiconductor shortages, and energy price volatility. And when enterprises run to challenges, most of the time, they address the symptoms. They don't address the real root causes. And that is why we have many examples you can see, you can work with in Nigeria. When Dangote started building his refinery about 14, 15 years ago, he didn't award contract for the building to a Chinese company. What he did was to set up a construction company and then assemble everything and first again constructed the port where those equipment will come in. Dangote equipment did not come in through Tinkan Port. They came in through Lekki Deep Sea Port. So most of the time, if you don't look at what will make your business to go on very well and what will not make them to go on very well, you will run into crisis. All the 800 engineers creating problem for Dangote, he has reabsorbed them after government intervention, but he has transferred them to Bono and Zamfara. That you are an engineer, go and work in cement factory, not in my refinery, and then go and set up your own refinery. So you must be intentional in what you will do and what you will not do. And then that is how turnaround will work for you. So there are many challenges that we are seeing. I'm sorry, the technology is not working for us. Now, there are many success stories in Nigeria which we can see, as I've been mentioning. The challenge, 70% of import dependency, supply disruptions, intervention of local suppliers, then result 40% local sourcing and 30% cost reduction and supply stability. So when you know where the challenges are going to come from, you must prepare yourself for it. Technological disruptions, digital divide, competitors with advanced technology will do better. Automation threat, cybersecurity risk, and investment requirement. What are the turnaround opportunities here? Digital transformation. You must leapfrog legacy systems. If technology is not working for any enterprise now, it is already working against them. Then platform business model, data monetization, and remote service delivery. And we must be able. When I went to Wharton Business School, in my class was the managing director of Uber Eats. And we started talking. We said, how did you come about it? He said it was very simple. We just discovered that majority, your data must speak to you. He said majority of those who order Uber ride, they were ordering the Uber ride to go to restaurant because they are in strange locations. He said they now discover 40%, gradually it went to 50% people ordering ride to go to restaurant. And now say, okay, if these guys are ordering the ride to go to restaurant, why can't we be the one delivering the food to them? They came with the idea and said everything. The same thing in local environment. We sat down with a Shagalinku restaurant. He said, how did you start your business? He said he started the business by washing plate for restaurant. He said he discovered that people will come and eat, they will grumble and complain the food is not good, and tomorrow they will come back again in Kano and Zaria. He said, then what did you now do? He said, I now decided to listen to their complaint and start my own business, address those complaints. I said, what was one of the complaints? He said, traditionally, in the north, the rural people don't sit on the table and chair to eat. They sit on the mat. He said, I created a place for them where you can sit on the mat to eat your food. He said, they come with their family, they sit on the mat and they eat their food. He said, he now discovers again that when they come to the restaurant, after eating, they will cross the road to the supermarket to buy something. He said, okay, that's another business idea. He started creating supermarket with Shagalinku. So he now said the restaurant will be upstairs, supermarket will be downstairs. So that you pass through the supermarket to get to the restaurant. When you are coming, you must surely buy something. He said, I said, then what is the next level? He said the next level is car wash. He said the people will go and park their car in car wash to come and eat. He said, why can't we have a car wash beside yours? I said, what is the next one we are going to do? He said, barbing salon. He said, because they hit here, they go and barb here. He said, now they will continue to do. So you can see. And we assume that Shagalinku didn't go to school. But he's strategic in the way he's running his businesses. And I said, okay, why don't you have a franchise model? He said, if I have franchise model, the taste will be different. Can't you see what is happening to Mr. Biggs? If you close your eyes, they put Shagalinku soup in your mouth in Zaria. The same taste you get in Zaria is what you get in Abuja. So he has made it to work very well for them. So as enterprise restructurers, you must be able to be intentional in the way you want to run the enterprise and to make sure it works for you. Within the Nigerian success story, we have the traditional retailers, e-commerce, competition, declining footfall, intervention, many channels, and the result is 150% growth. Our clients are no longer on the street, they are online. We must be able to find them online and meet them at their point of need. What are the challenges? Regulatory requirements, international compliance, investors' expectation, ESG criteria for funding, physical risk, transition costs, and the opportunities that are there, green products, energy efficiency, carbon credit, and sustainable branding. So whatever we say we are doing in the ecosystem, if we don't do it very well, foreigners will come and do it. Earlier this week, I had 2 visitors from the United States. They came to partner with us. What is the project they were doing? They were doing a project for carbon credit in Taraba State. And the government is supporting them because they want to support the cocoa farmers to be able to use non-chemical fertilizer that will make their products to be eco-friendly and do better. And Taraba State government has already registered 5,000 farmers to work with them, but the people say, no, we want only 1,000. Let us start with 1,000. And by the time they see the benefit. So opportunities are there. Those people, entrepreneurs who are already in the businesses, they are not thinking ahead because they are too busy running the business. Then the case of agricultural processor, challenge international buyers demanding sustainability, intervention, solar power, water recycling, fair trade, and the result, 40% premium pricing and preferred supplier. So all those things will make us to do better. Then geopolitical tension, the challenge, we saw the trade war between Donald Trump and Canada, between Donald Trump and China, and then we must be able to now look at the regional focus. African Continental Free Trade Area opportunities, South-South trade, neutral positioning, and diaspora engagement, investment, and expertise. What are the local economics uncertainty, the Nigeria reality, the currency and monetary challenges? Within this area, we see the current situation, Naira volatility, 40% depreciation in 2 years, then multiple exchange rates, dollar scarcity, and inflation surge. And if we are doing businesses and we are working to restructure enterprises, we must be intentional in knowing what is happening in our environment. I go back to the Dangote interview. Dangote said if he has dollar, he will go and change it to Naira. Because in the next 6 months, dollar will crash. Because things are happening in the petroleum sector where substantial part of our foreign exchange is going. So things are really changing, and then we must be prepared for it so that we are not surprised. Then natural hedging, local sourcing and sales, currency diversification, multiple currency operations, pricing flexibility, and export orientation. Then regulatory and policy environment, we need to see the challenges. Policy reversals, quite a number of policy reversals has taken place, multiple taxation, bureaucratic delays, and enforcement inconsistency. Then the adaptive strategies, regulatory intelligence, compliance excellence, government relations, and industry association. And another thing funders must do is that you don't seek turnaround management idea when the business has failed. You start it even when the business is going on. That is why in Israel, there is the Israeli Small and Medium Development Agency, like our host MEDA. 60% of what that agency is doing is not to help businesses that are failing. It's to support businesses that are doing well. And it is an agency of government you go to, you say, my business is going well, but I'm worried about tomorrow. I don't know what will come in and encroach my space, and the business will not be able to do well. And then the agency will get consultant to work with the entrepreneur to look ahead to now see what is the future of this business. What are you going to do? Like Zoludo will say, everybody is talking of electric car. The people are building petrol station. So you can see misalignment between electric car and petrol station. And this is what is the crisis in the petroleum sector. This is a major issue. People have gone to the banks to borrow money to do tank farm. Dangote spent 15 years building refinery. You should have known that by the time Dangote refinery comes on board, tank farm will not be relevant again, because tank farm is only for import. And the refinery is there. And they were not channeling. They were not looking forward. And they were not seeing it. I give you another example. And this one, I will not mention the name of the organization because we signed a non-disclosure agreement and it's related to Bank of Industry. And this organization said when COVID came, they discovered that their greatest bottleneck was logistics. How do we carry our product from where we produce to our end users? Because they are producing raw material for chemical industry. And they now said, look, if these drivers complain that because of COVID, they cannot come and everything, they went to Bank of Industry and borrowed money. Do you know what they used the money for? They laid 27-kilometer pipe to be able to pump the raw material from the production to the end users. And then they removed the drivers. They said the idea of vehicle breaking down has been taken off. The driver going on strike has gone off. With a telephone, the company that is requesting for goods, we just call them. They will open the tap from here. There's a meter here, there's a meter there. At the end of the day, they do their reconciliation. What has left here that did not get there is on the 27-kilometer pipe. They know how to account for it. So organizations are looking forward. And if they didn't do that, if COVID did not force them to do that, they would have been paying heavily today on logistics and trailer drivers. And you know, majority of the trailer drivers, it's like they were created by another God. Because the way they reason, the way they do their business, you must be able to be at their level. Because there was a business that we supported. It was actually a logistics business in Kaduna, and they were doing movement of petroleum. From Port Harcourt that time, they go to Port Harcourt refinery to move petrol. So when we started working with this organization, I told my colleague, I said, you know what, we need to get somebody to pretend to be a motor boy and follow the trailer. We want to know what happens on the road between Port Harcourt and Kaduna. And the first thing, when the guy wrote a report, he said, between Port Harcourt and Kaduna, there are 27 bus stops where the truck will park. And that is why it takes a minimum of 12 days for the trailer to move from Port Harcourt refinery to Kaduna. I said, what now happened? He said, this driver has wife in every bus stop. He said, then he will park. He will do all those things. He will park the truck and he say, I am coming. He has gone inside. He said that when he finished, he will come back. He said by that time he discovered he has lost some time. He will be overspeeding. He said those are the causes of accident. He said at a point when they got to the 20th place, the guy was out of money. He didn't have cash again to settle the wives on the road. He now called the people and they were moving diesel. He now called them to come and remove 100 liters, and he sold them in black market, and he pocketed the money. He said, then what now happened again? He said, when they were now approaching Kaduna, he looked at it, he measured it. The thing was not measuring again. He said, we are going to hard water. Adulteration has come in. He said, he was now asking him to say, why are you doing this? Don't you know this thing will be adulterated? It's not good. He said, no, diesel, water will go down. Diesel will come up. He said, by the time, he said, then he now said something that frightened me. He said, my own is even better. He said, then which one is worse than this one? He said, we can sell the whole thing and put the truck on fire. Insurance will pay. So you can see criminal things that they are doing because they want to survive. So we now said, to solve this problem, we now called the guy who owns the company. We said, you know what? Sack all your drivers. Employ graduates. And let them have a different orientation, because we can't believe a graduate will not reason that I will steal your diesel. Then when I'm about to enter Kaduna, I set it on fire. And then to cover, and you see, the cost of the truck is more than the cost of the diesel. That time, so it's like your road safety arrest you that you have no driver's license. You said it is at home, and you now go home to make a fake driver's license. Lack of driver's license is a traffic offense. Making a fake license is a criminal offense. So you are doing a criminal offense to cover a civil offense. So we must be able to understand, if the guy did not invite consultant to come and look at the business, what can we do, what is going wrong with us, they will not be able to manage it. Security and social challenges, business impact, operational disruptions, supply chain risk, staff safety, retention and challenges, then investment hesitancy. And we've talked about this Gen Z. When you are working with them, you must be tolerant. You must manage them. you must understand their orientation, or else they will tell you that you are already affecting their mental health. What are the mitigating approaches? Community engagement, local partnership, security innovation, technology solution, business continuity, and social investment. There was a donor agency. It's actually a German donor agency that was giving support to Babangona. And then they wanted us to conduct due diligence on Babangona. And we have to go to Zaria to inspect the warehouses of Babangona. And when we got to the warehouse in Saminaka, we asked Babangona, where is the security of this, where is the security guard of this warehouse? Babangona said, I have no security guard. I said, why? He said, different, because when we were in Zaria, we saw security guard. When we were in Saminaka, no security guard. He said, the money that I used to pay security guard, I give it to the traditional ruler. The traditional ruler protects the warehouse. He said, because when we started learning from institutional memory, he said, our security guard is always from another town. And then when we pay him, nothing for the community, they are not protecting us. They know how to loot the warehouse. He said, but the traditional ruler, with one command, nobody goes there. Nobody will go there. He says, so we decided to be paying him so that they can be using his traditional authority to protect us. The German agency said, no, we need a receipt of security guard that is paid. So Babangona now asked, he said, what do we do? I said, now, Chebi, Seriki is the one that is protecting you. Write his name as security guard. And every month, ask him to sign that you are paying salary and present it to them. He said, it's a governance issue. I said, do you want governance or you want your warehouse to be protected? You have to choose one between the two. So those are the issues that must be addressed if you want to solve the issue. Business case for turnaround management, economic impact analysis. There's direct benefit. When you do turnaround management, the enterprise will survive, preserving productive capacity. I give you the example of this airline in the US, Spirit. Spirit Airline is somebody told me that part of it is that any airport you go to, Atlanta Airport, Boston Airport, they will give Spirit Airline one corner. They will push them to the corner. Because Spirit is a low-cost airline. You can get ticket for as low as $25, but you will pay for your backpack. You will pay for your seat you want to sit on. You will pay for your water. You pay for everything. And after buying your ticket, you pay for your boarding pass. Everything, they say that is their own business model. So you must understand, they said they are for students who just want to go on holiday. Your case, by the time you have check-in luggage, your case is worse. Because the cost of the check-in luggage is higher than the cost of your ticket. So you must understand the model. And then if the model is not working, how you are going to change it. But technically, they are very good. It's just the customer service they don't have. And another thing you see in Europe and America, you discover that they don't have waiters who will help you to carry your luggage into your hotel room because they don't want to pay. So understand, any business that you are turning around, the enterprise survival is key, and if things are not working, get what you need to change. Employment protection, tax revenue, supply chain stability. Any company, any business you are working with now, a major crisis that we face enterprises in this country, 2026, 2027, is the question of tax. The new tax law is coming. People don't understand it. Those who understand it are living in denial. That don't worry, all of us are criminals in Nigeria, nothing will happen, it won't help. But they will use some people as examples. So people must start learning now, how do we structure our taxes? There was a bureau de change man in Abuja. If you go to him today and you want to transfer money to his account, he will give you an account number, you transfer money. When you go to him next week, he has changed the account. I said, Alaji, why are you doing this? He said, before FRS, we know I own the company, I close it, I open another one. He said, that is how I will not pay tax. So many people are looking at it because the new tax law says if you have 50 million turnover, you will not pay tax. But if you keep on changing your company, you will lack institutional memory. Your organization will only be one year old. And by the time government discovers that, what they are going to do is to have a linkage between your BVN and the different company. Somebody said he will open 10 companies. This one will do 50 million, 50 million, 50 million, 50 million. Then at the end of the day, they have 500 million. They will not pay any tax. It will be seen. And you must be able to learn how. And one thing that is going to come up from next year is that government will empower tax consultants to be able to do their job, like what is happening in Angola and South Africa. In Angola, I don't see anybody who will do a business that is more than $10,000 throughout the year that you will not have tax consultant. Because the South African Revenue Service will not talk to you. Your consultant is the one. And your consultant has integrity because he will have access to your account. He will be able to profile your account. And at the end of the month, he will upload, this is the amount of tax you have to pay. You will only need to approve it. And if you don't approve it, it's your tax consultant that will report you to SARS. And SARS will not ask you. SARS will talk to your bank. And your bank will give you a loan you did not apply for to pay SARS. And when you pay SARS, then they will now say, then your credit rating is falling because you are owing SARS. And SARS is taking your money through your bank. So you need to be prepared. Enterprises will need to be prepared for it, of what is coming. Multiplier effects, suppliers network. Every safe enterprise supports 5 to 10 suppliers. And 5 to 10 suppliers means that 5 to 10 families are relying on that enterprise, and they are doing well. Consumer spending, protected jobs, maintain demands, banking stability, reduce non-performing loans, strengthen financial sector, then innovation spillover, best practices. Last week, Saturday, there was Startup Abuja. Startup Abuja brought together about 2,500 youth, young people. All of them have different ideas, and they are doing a whole lot of things. Disruptions are going to be happening with the traditional companies. And these youth, they have a lot of ideas of what they are doing. And many of them are not even operating within the normal banking sector. Mr. Adewumi was calling my attention to something this morning. They said, every month, 60 million Nigerians spend $5.6 million on what? Betting, gambling. That is the big business the youth are doing now. And you keep on wondering what happened. One day in Abuja, I went to Jabi Park in the morning. They sent a message to me from Jos, so I went to pick it. And I saw a crowd in one place. I said, what happened? What are they doing? They said the resort is going to come out. Resort of what? Resort of push and betting. So people came to sleep overnight because they are waiting for resort of push and betting and gambling that they're doing. So quantified impact, based on the international benchmark data, return on investment in turnaround is 4 to 6 naira return per 1 naira invested. If you invest 1 naira in turnaround, in turning your company around, you will get a profit of 4 to 6 naira. Job multiplier, it will save jobs. GDP impact, 1% improvement in enterprise. Then innovation effect, 30% of turnaround companies become strong sector leader because they have burnt their fingers, they have learned their lessons, and they have moved forward to the next level. Then comparative analysis, countries with structured turnaround approaches. South Korea, between 1997 to 2000, they created workout programs for distressed companies, result faster recovery from the Asian financial crisis, key success, coordinated creditor-debtor negotiation. United States, between 2008 and 2010, automotive industry, turnaround, result, preserved 1.5 million assets, key success, government-private sector. And when organizations are intentional about turning themselves around and getting help when they need it, they perform better. Learn from the example of Hyundai. When there was automobile crisis in the US, Hyundai was down. Ford Motors was up. And what the management did was to bring in a turnaround manager to Hyundai. And the only question the turnaround manager said, you need to sit down with your consumers and ask them, what are you afraid of? The consumers said they are afraid of losing their jobs. And he said, okay, what we are going to do is that we will sell our car to you. If you lose your job within 12 months of buying this car, return the car to us. We will return your money. No strings attached. So the people now have enough confidence, and people started buying Hyundai. and then they did not sanction them, and then they are able to do better. So turnaround will give you many opportunities. In Germany, Mittelstand Resilience Program, the result, lowest SME failure rates in Europe, key success, preventive turnaround culture, help them to do better. What are the lessons for Nigeria? Early intervention, prevention is better than cure. Most of the time, we keep on covering up our enterprises when we are supposed to seek help, when we are supposed to seek support. Coordinated approach, all stakeholders must align. Skills development, turnaround, expertise is critical, and financial innovation, creative funding, and cultural shift, removing the stigma from business difficulty. A business is like a human being. People fall sick, and because they fall sick, they go to the hospital, they get better. We must not treat enterprises as if the moment they fall sick, we rush them to the mortuary, and then we kill them. More lessons for Nigeria: economics losses, failed enterprises, 2.5 trillion annual value in destruction. We have not added the next oil because that one just happened. Job losses, 3 million jobs at risk. Non-performing loan, banking sector stability will be threatened. Tax revenue over 500 billion. Then social consequences, youth unemployment, brain drain, poverty growth, and innovation stagnation. So if we are able to do, return on investment will be better in the short term, in the medium term. You can see it, and everything like that is in the paper. Then long term, 5 years plus, industry transformation, export champions, innovation hubs, and ecosystem leaders. Suppliers are getting better, and the enterprise is going to be better for it. We have a framework for local company transformation, which we share with you because this is a stakeholder engagement. And then we need to be able to go back with tools that will make our job to do better. The first one I will share with you is what we call transform model. The first one is TRIGE, and assessment. Rapid diagnostic test to determine the viability of any enterprise. Stakeholder engagement and mapping, resource availability, and quick wins identification. TRIGE is saying that, look, for every enterprise that you are looking at, there are some that are in emergency, that it may even be better to wind them down. There are some that are priority. There are some that are not urgent. You must determine what kind of issues are facing them. The R is for restructuring plan. The A is for action implemented. Financial restructuring, operational improvement, organizational redesign, and strategic position. Unfortunately, in Nigeria, we have a culture of throwing money as problems. When they say this enterprise has problems, they say give them more money. More money will not help them. Most of the time, it could be management that you have to change. Most of the time, it could be your suppliers you have to change. Most of the time, it could be your business model that you have to change. You must be able to identify them and then quickly do those things. The new business model, market opportunity identification, value proposition redesign, revenue model innovation, and partnership strategy. Then stakeholder alignment, creditor negotiations, employee engagement, customer retention, and supplier partnership. Then financial optimization, then operational excellence. That is what we call the transform. Then risk management, then monitoring, tracking what you are doing, measuring your success. Then you have the implementation phases. The first 100 days. If we want to turn around an enterprise, you must be able to give yourself the dashboard. Create your dashboard. The first 100 days, what do we want to achieve? Then what are the key actions you need to take? Stop the bleeding. Enterprise restructuring means that enterprise is bleeding. The first thing is to stop the bleeding. Accident has occurred to the enterprise. Stop the bleeding. Immediately you stop the bleeding, restore stakeholder confidence, and then secure short-term funding, then stabilize the operations. Then key actions, card flow management, critical suppliers negotiation, customer retention. One of my friends that turned around Tandy Gurana, you remember that soft drink factory when they were, he told me that the major crisis is in Canada now. He's an accountant. He said when he took over the company, he discovered that the company has money, but they have a lot of debt. And the management was saying, let us pay the debt. Because he discovered that governance was challenged. Majority of the suppliers are the wives of the staff. So the money they were supposed to use to turn around the enterprises, they want to use to pay creditors. And as an accountant, I'm not an accountant, he was the one who taught me that, why are you in a hurry? If I'm owing Madam Morin and our relationship continues, why must I pay everything at the same time? He said, pay part of it, then continue to service it, let her be assured that we are okay, and continued to call her and say, Madam, I know I'm owing you, but I will pay a little. He said, you only pay off when you are terminating a relationship. When I know I will not see her tomorrow, let me just pay her and go. So he said what he now did was to restructure the financial management and create a 90-day window to say, okay, anything you supply me, you not get your money until 90 days. He said that 90 days he was able to turn around the money that is available, and then confidence came back and everybody was happy. So you must be able to do financial engineering to be able to get to where you want to be. What are the success matrices? Cash bonds reduction rate, employee retention, customer defection minimized, and supplier support secured. And most of the time, don't speak to our data. You must speak to your data. There was a company in Port Harcourt also. When they called me and they said they have this issue, I said, okay, you know where we are going to start from. Give me access to your IT infrastructure. Let me look at the workflow of your staff. When I look at the workflow of the staff, I discovered that 80% of the staff spend 40% of their time in the office applying for other jobs. I said they don't believe in this organization. They are going. So the first thing, this 80% they are spending to look for other jobs, let's first bring them back. Let's just give them assurance, because they are the people who will drive this business. If you come to the office and you resume at 8 o'clock, and between 8 and 12 you are applying for other jobs, you are not doing that company's job. You are doing your own job. Then the next thing you know, entrepreneurs like to do quick fixes. He said, let us block. Then the remaining other people, they are on Facebook and Instagram and TikTok. He said, let us block social media from the office IT. I said, you are wasting your time. They will use their own data and use their phone. He said, let us stop them from bringing phone to the office. I said, it's a human rights issue. You can't do it. So different ways. You must be able to give them confidence so that what you are giving them. Then phase 2, strategic restructuring between 100 days and 365 days. This is the objective. These are the key actions. And these are the success matrix. Then you need to have a positive EBITDA. Earnings before your tax. Then debt service coverage. Then market share stabilization. Then productivity improvement. Then by the time you are now going to phase 3, 1 to 3 years, these are the objectives, these are the key actions, then these are the matrix. The moment you put all these things in place, it will assure every stakeholder that you know where you are going. If I ask you and say, follow me, what question are you going to ask me? Where are we going? So if I don't know where we are going, you will not follow me. So you must first define what is the road. Where are we going? Where are you taking this company in the next 3 years? What are we going to be doing? Then critical success factors, leadership, commitment is key. Owner's mindset. If you believe it will succeed, it will succeed. If you believe it will not succeed, it will not succeed. Whatever you put the pastors call it negative self-fulfilling prophecy. People will see bad vision for themselves and the thing will happen to them. They will say this organization will collapse, and it will collapse because it is their own vision. Everything will work towards the way they say. Then decisive action, resource allocation, then long-term view. Then you must have your stakeholders buy-in. You must have execution excellence and cultural transformation. There are case studies which are there that you need to look at. I think I have about 4 case studies there, but I will just use one for illustration. The first one is manufacturing turnaround. Company is a large, fast-moving consumer good in Lagos. Situation in 2022, 60% capacity utilization, 5 billion debt burden, market share loss to import and aging equipment and processes. What was the intervention? Debt restructuring with local banks, product portfolio rationalization, loan manufacturing implementation, and local raw materials development. The moment that one was put in place, the result that came in 2024, 85% capacity utilization, debt reduction by 40%, 20% market share gain, and 30% productivity improvement. What are the key lessons? Local content strategy is critical. Operational excellence drives recovery, and stakeholder patience is essential, while innovation in constraint will work for you. The second one is a retail chain transformation in the Southwest. They have 15 stores in 2021. 8 were loss-making, e-commerce competition, high rental cost, and inventory management issues. Then the intervention, is store rationalization, omnichannel strategy, inventory optimization, and private label development. Then resort 2024, 10 profitable stores, 200% online revenue growth, 25% margin improvement, and revenue expansion began. Then what are the key lessons? Digital integration is essential. If technology is not working for you, it's already working against you. If you are not online, you have already lost out. And this example that when I was in Kaduna, that time there was acute shortage of water. We had there's this Merua, these people who use jerry can to sell water. They put 10 jerry can inside their truck. So one day I called the Merua. I will tell the gate man to call me Merua. He will bring the water, pour it in the drum, and he will go. So one day the Merua came and he didn't go on time. I said, "What happened?" He said, "Oh, guy, I want to give you my phone number." I said, "Why?" He said, "No, I now have a phone." He said, "Since I have a phone, I don't go around the town again. I sit under the tree. My customers will call me on phone and I take water to them." So when Merua brought the water, that time it was, I think it was 100 naira. He now gave me 20 naira change. I said, "What happened?" He said, "Don't you know that each time you send gate man to call me, I pay him 30 naira. He said, "This one that we are dealing directly with each other, you can get customer." So you can see the Merua is giving back to giving me commission, is returning. And technology is already doing its business. So instead of wandering around the town, he has a list of the customers who will call him to bring water. So technology must work for you. And the third one is agricultural processor, cassava processing company in Southwest. Obsolete equipment, quality issues, farmers' payment delays, export opportunity loss, and the intervention, equipment upgrade financing, farmers' partnership program, quality certification pursuit, and export market development. The result in 2023, 300% capacity increase, and the international quality, and they work with direct farmers. I was talking to Mr. Adenino yesterday when we got to a quote, and now we saw that they are repairing their lift and everything. And since the beginning of the week, the hotel has been very busy. And Eco Hotel is one of the oldest hotels. By 2027, they will be 50 years. It was built in 1977. Then you now see how come they are able to continue to keep on. It's continuous improvement. Many hotels have died. Where is the Ikoyi Hotel? They have killed them, they have sold them, and they have bought them, they have pulled down the building. So different things. So for them to be consistent, these are examples, you can find them everywhere. You can see how the work is going and everything. And Mr. Adeno was giving me the example of Fraser Suits in Abuja. And the owners of Fraser Suits, they put the Indian man who is the manager there, and when he tells you this is what they will do it. And they make sure they are continuously improving, setting the rules and making sure. So the same thing, it is that discipline that most of our enterprises lack. And that is why they are not doing well. And that is why the first thing is get them to have the right mindset as we are turning them around. Then international benchmark, India textile industry, global competition, technology lack, and then government industry partnership, technology upgrade funds, and then the result that we are getting is there. Nigeria application, sector-wide approaches is possible. Government role is crucial. Technology focus, essential. And export orientation is valuable. And most of the time, last week also, we were doing something for women in fashion under the Women's Chamber of Commerce. And all of them, they want to go into AFT, CTA, they want to export. But part of the issue they have is mentality. They go to trade fair in Nigeria. They are going to sell. You don't go to trade fair to sell. You go to trade fair to cultivate the market, to have partnership, to build relationship. And it is those ones now that will now help you to deepen your market. One year we were going to Dubai to do training for Supreme Court staff, and about 25 of them. That time the Emirate was not coming to Kaduna, they were not coming to Abuja, they were in Lagos. So at the airport here, I was coordinating the movement. So because I had 25 passengers, by fire by force, I have to befriend the manager of Emirate. So we were talking, and that please make sure these people are coming from Abuja. I don't want them to miss the flight. After everything, the manager of the airline called me and said, he needs my help. I said, what for? He said there's somebody, they are carrying some goods from Nigeria to Dubai, and that because you know Nigerians, when they are going, they don't have luggage. It's when they are coming back, they will have excess luggage. He said I should talk to my participants so that they can use their luggage allowance. I said, no. I said, supposing they carry drug, how do I explain it? He said, no. He knows this person, he knows the business and everything. I said, you know what we are going to do? Put it into writing. Give us a letter. We will give you the 25 luggage allowance. Tag it in their name, not our name. Let them go and collect their thing, but we just do it. Even the people I did it for, who took their luggage allowance, they didn't know. So we signed all the papers. We got to Dubai, the lady collected her bags and walked away, and we finished. After 2 weeks of training, she now called me and she was coming to greet me in my hotel. I said, no problem. She came. As she came, she met my participant with me because we finished the training. And the participants were now showing me the shoes, the bags they bought in the market, which they are bringing to Abuja to sell. And the lady was shaking her head. When my participant left, she said, Oga, those things your people buy, those were the things I brought from Aba. I said, how? I said, but the road made in Italy. He said, yes. My people here said I should put made in Italy. I brought them from Aba. The same thing I brought, they have come to buy, they are taking it to Nigeria. So when I got talking, I said the quality is very good. He said that is Aba quality for you, that they are very good. I now told her, I said, go back to this your people who are buying from you and selling for you. Tell them that you want to do white label for them. Let them, make them from Nigeria. Don't put made in Italy. Give it to them. Let them put whatever made they want to put. It was there that it was in Dubai that I know what is called copy 1, copy 2, copy 3. I said in Nigeria, fake is fake. You either have original or the fake one. The idea of saying copy 1, copy 2. And that was how she changed the business model. I said, you don't even need to come. Be sending it to them. Produce in Nigeria, export it to them. And then they will be selling for you. You don't even need to put your own name. You are a manufacturer. They are the retailers. They are the sellers. So the opportunities are there. That was how she was able to grow her business. Many people are putting in their best, but they are not seeing the result because they don't think beyond it. This is the example of Brazil. There are other examples we see in the paper that will help us to be able to see. There are many things for Nigeria to learn. There are some sector-specific insight. Common challenges, equipment obsolescence. Equipment is changing. Import dependency. Another lesson I picked from the BOI ESG conference was the lady that was talking, Mrs. Obaro that was talking in the fire chat. He said that my going into ESG is not because I am interested. He said it's to cut my cost. He said the cost of energy was too high. He said that's why I invested in solar. And I discovered that when I invested in solar, green energy, it was better for the environment and my cost is coming down. The same thing now, most enterprises are going into solar. Most enterprises are reducing their cost and people are really doing it. Import dependency, power cost, skill shortages, phase modernization for turnaround strategies, local content development, and energy efficiency. Then service sector, technology adoption, customer experience, agile operations, and data utilization. Common challenges, digital disruption, customer acquisition costs, and talent retention. So agricultural sector, you need patient investment, you need agricultural quality system, social responsibility, and government support. And these are the common challenges and the strategies. Then building a turnaround ecosystem, there are many roles for stakeholders which we have listed. Government has its own role. They can do direct support, they can do policy framework. Then indirect support in education curriculum, right from the school. Then we can have the product innovation, risk management, and ecosystem. Everybody has a role to play. And then professional services. We have the capacity building, market development, and the service delivery. Then educational institution. We must be able to train our youth right from school, turnaround management courses, development, then the talent pipeline that they need to do. Then knowledge creation, research centers, publications, conferences, and best practices documentation. Then there are some infrastructure that are needed. We have listed them in the presentation. Then financial infrastructure, information system, then enabling partnership, then creating a culture, changing the mindset of what we are doing and how we are doing it. Then moving away from a system where we believe that somebody will do it for us. We must be able to develop ourselves. Part of what the TMA is doing is certification program. Either you become a certified turnaround analyst or certified turnaround manager. Then organizational capability that we put in place. Policy recommendation and the way forward. We have actions we have recommended for 0 to 6 months. There are some actions that are going to be taken. After that time, high-level government commitment, multi-stakeholder task force, and believe in it, emergency response system, and then element capacity building. There are some tools that that are available to turn around management association members. And if you join the association, you get those tools, you will have opportunity. I want to show you the list of those tools that we use for organizational turnaround, global positioning. And as members of the association, because of our partnership with the international office, if you want to turn around any enterprise, you have reservoir of knowledge in the association that can help you. It is from survivor to posterity. Transformation is imperative. Countries which embrace turnaround approaches have superior economic resilience. And entrepreneurial spirit, market size, youth demography makes us to be able to do better in Nigeria. It's a call to action that we need to do. I'm looking for the tools that we need to put in place. Yes, these are the tools that are available to TMA members only. Turnaround readiness assessment tool, detailed self-assessment questionnaire for business. You may even start turning around an enterprise without visiting. You can send the questionnaire to them, they will complete the questionnaire. By the time you start analyzing, it will show you many things that they are not looking at. It will show you where they are bleeding, that they are not even considering. As simple as issuance of receipt in an enterprise. Many people would think that, oh, when you issue a receipt, you are wasting money by printing receipt. It's a governance thing. It helps you to be able to drive your business. Then financial restructuring template, stakeholder communication guideline, international best practice compendium, then resource directory, list of turnaround professional, institutional and resources, and then the glossary of terms. All those things will help you to be able to do your business very well. And those of us who are in the financial sector, it will help you to know whether the institution that is applying for facility is hiding something from you that you really don't, that you need to shine your eyes, as we say in Nigeria, to be able to see the complete story. Thank you very much and good afternoon. Do we have questions, observations, and comments? I think I will hand over to Madam Morin. Thank you. Okay. Okay, I will say, okay.
I'll take the microphone around my ears. Any questions here? Questions? Yes. I don't think that works. It's not working. Sorry.
Thank you so much, Madam Morin. Excellent presentation, Doctor. The example of Nestor couldn't have come at a better time. So what do you think government should do going forward? Because most times they don't have the patience to turn around. They rather let go and then move on with life, which is more expensive. At what point in time is turnaround needed? Because there's also the issue of people being open and honest. When I heard the story of Nestor, I was shocked. Because not long ago, there was a huge, society wedding thrown. So, since people are not honest enough to say we are in the deep and we need help, when's the best time to proffer a turnaround solution? Since in Nigeria, we still have people not being open enough to say, they keep on praying that government will either support or divine help will come their way. And we really don't know how bad things are till they've gotten worse. Thank you, sir.
Hello? Okay, it's on. Thank you very much. You see, the challenge with institutions like Nestor is one, lack of transparency. And this is where everybody has a role to play. Business membership organization, we see many of them. You know that things are not okay. And I was doing I was doing a position paper for NAFDAC. They were talking about this issue of people using chemicals to store beans and all those things in the market. You know what I'm talking about, because they don't want insect in the beans they use. When we were growing up, our mothers were using pepper. They would put pepper inside the bean, but now it's what do you call this chemical? Sniper. They now use sniper because it is cheaper and everything to be able to do. I told NAFDAC, I said, you can't do it. How many staff do you have? How many markets in Nigeria? I said, what you need to do, build the capacity of the business membership organization. They will police the market for you. They will be the one, they know those who are doing it, and they will be the one to report. So these are the kind of things we need to do. We need to be able to look at the sector, and we need to be able to speak to our data. When it is not right, it is not right. When people are painting pictures the way they are dressing their accounts and everything, then business membership organization will be able to say that, look, we know something is wrong. And the rule, what the Nigeria Revenue Service is going to be doing next year is going to help the sector, because professionals will be held accountable. In the United States, if you are a turnaround manager, if you turn around an enterprise and it runs into problem within the next 2 years, they will withdraw your certificate. Because you should have seen it coming. You should have known that the way these people are going, this is where this thing is going to lead them to. And you should not allow them to hide. Gideon was telling me a story in South Africa. They turned around an enterprise, and then the new owners took over, and they were doing like what Engineer Wilson will say, asset those who bought the old NEPA, and when the discos were unbundled. When the discos were unbundled, they knew that they are going to fail, because apart from Ikeja and Eko discos, all others, they were selling the asset of NEPA in those places. It's like selling Nigeria Railways today. If you sell Nigeria Railways today, the new people who will come out, you know the first thing they will sell? They will sell a Butemeta, the compound. That land alone is enough asset to pay $1 billion that you are going to use to sell railways, because of the future looking. And when we were working with Engineer Shijuade, the former managing director of Nigeria Railways, I told him, I said, you are making money from railway property, but you are not a property company. The money is coming from your non-core activity, and you now think that you are helping, they are helping. I said, separate it. Have railway properties. Let it be a property company. Now have railway. Your core business is transportation, first transportation, so that people don't assume that you are making money. There is this conversation that has been going on. Our refineries are not working. Do we agree? Engineers are working in the refinery and they are collecting salary. Where is the money coming from? The money is coming from the past investment of NNPC that is non-oil related. So they are making money not from their primary activity, which is zero. I can't remember when Kaduna Refinery operated last. Then people are there earning salary, because Kaduna Refinery has properties which they lease out here and there, and they are making money. They assume that they are making money, and nobody is accounting for those things. So these are the issues that people must be able to address, and we must be able to tell ourselves the truth as a country. And then enterprises that are come, until you withdraw people's certificate. Do you see what happened to Leonard in Canada earlier this year, when they use artificial intelligence to generate audit report, and then for a government agency, and the people now, and they are so lazy that they could not even edit it properly. That then the AI was telling them that if you want me to present another option, I present it. So they are not presenting according to the facts of the matter. It's AI that is generating report for them. And this will continue. A whole lot of things. People will be dressing their accounts. Thank you very much.
Thank you. Any other question? Do we have any questions online? Can you check the Zoom link?
Yes, online, yes.
None? None online.
Okay.
Thank you very much for that excellent question. Please, another round of applause for Dr. Steve.
Yeah.
I need a better one, because this paper is very, very, very rich. Okay. It was a long one, but I'm sure you saw the program. But it was very rich, very well researched, researched, and very well delivered. So thank you very much. That's why he's our president. Okay. Yes, so the next thing on our agenda is lunch. I know we had tea break not too long ago, but I'm sure some of you reserved space for lunch. So let's take that 1 hour. We should be back here at 10 minutes to 2 rather. So we can go into the panel. Or you don't want to eat now? Should we delay it and take the panel, and then we finish off with lunch? Do we want to do that?
If you agree, say hi.
Okay, okay, because I'm sure the tea break is still in the system. Okay, so I would invite now my panelists, but we need to set up the chairs. Maybe the people at the far, we can move up further and take the seats on the side so we can see them very well. So, is none other than our own TMA Vice President North, Alhaji Adamu Abdulkadri Gambo. Please, a round of applause for him. All right, thanks. Alhaji Gambo. COVID did something for us. It allowed us to meet people and engage online. So we're talking for over 3 years. We just met each other today, but we're in the same association, here and a few others. But we're talking like we all knew ourselves, so yeah. Yes.
Distinguished guests, esteemed panelists, colleagues, friends of our TMB, welcome to this critical conversation on reviving Moribund asset for economic growth. Nigeria stands at the economic crossroads. According to recent data from the Manufacturers Association of Nigeria, industry capacity utilization hovers around 55%, meaning nearly half of the current productive capacity remains idle. The Bank of Industry estimated that non-performing assets of manufacturers is to the tune of about 2 trillion naira. While thousands of SMEs that once contributed to the employment and GDP now sit dormant or operate below potentials. These are not just statistics. They present real factories with silent machinery, warehouse filled with unsold inventory, skilled workers without jobs, and community without economic anchors. But within this challenge lies tremendous opportunity. If we could revive even 20% of this moribund asset, we could create hundreds of thousands of jobs, generate billions in economic activity, and strengthen industrial base. Today's panels brings together leaders who understand both the problems and the solution, from financial institutions, hold on distressed asset, to legal experts who navigate the regulatory framework, to industry leaders, and then to Chamber of Commerce that connect all the stakeholders. Our goal is not just to discuss theory, but to identify practical and actionable strategies that can be implemented immediately. Fellow attendees, permit me to introduce our today's panelists for this critical session. We have Dr. Victor Dike, who is the CEO of Quick Projects Limited management consulting firm. We also have Dr. Haggai Gutab, CEO, Fingertips Enterprise Development Partners Limited. And to balance the gender, we have Dr. Naomi Omachuke, Managing Partner, N2 Consult. Fellow panelists, you are most welcome to these strategic conversations where we go and navigate around the Moribund assets in our country, Nigeria. Now, let me start with Dr. Dike. Dr. Dike, looking at the statistics given on the BOI non-performing assets, the Bank of Industry managed a substantial portfolio of development loans across manufacturing, agribusiness, and other sectors. From your own vantage point, could you paint a picture of the current landscape distressed Moribund industry asset in Nigeria? And specifically, what percentage from your own perspective of these loans will be classified, let's say, as non-performing? And what are the primary causes from your own perspectives? And then what can we do to remediate this situation? Thank you.
Yes, thank you. Of course, when it comes to statistics around non-performing loans, this keeps shifting, and the regulatory authorities that more like have the data comes up with these figures periodically. But essentially, non-performing loans can be attributed to a number of factors. The causes are numerous. In Dr. Gidon's presentation, he did quite well itemizing the factors, so I won't be repeating that. A key issue with SMEs is the capacity, management capacity. And one of the things we have seen is that businesses tend to assume that capital is the major challenge they have. I was in banking, and one thing you see is that when customers come with requests for facilities, again with the mindset that finance is the issue they have, the first question you need to ask is, what happened to your previous capital? BOI is typically concerned that if you had your startup capital and you probably lost it for some reasons, where is the guarantee that if we give you this capital, same will not happen? The expectation is that you need to demonstrate that management-wise, you are more competent to manage the next naira we are giving you. If you are unable to demonstrate capacity or a change of mindset, should we entrust you with the next naira? So a turnaround manager must ask those specific questions, that because the capacity you need to manage 50 million, is it that same capacity that you need? If you retain that capacity, should we give you 2 billion naira? The answer is obviously no, because you need different level of capacity to manage the next naira. So turnaround managers must invest, must be able to assess. As you assess the technical capacity, the operational processes, where the company is with digitalization, you should be also be asking the business, how do you improve your capacity to ensure that you can manage the next level of business that you want to go into. So we will continue to ensure that businesses have the discipline to run their businesses so that what you have, the rate of business failure can be better managed.
Thank you, Mr. Dike. Let me move to Dr. Gutav. As a rider to what Dr. Dike said, it is not only the Bank of Industry that has that kind of huge portfolio of more than or about 2 trillion. That is a developmental bank with few branches that cut across the country. I don't know, in your own perspective as a consultant, whether you have engaged or have an opportunity to engage with your clients from other banks in this country, what are their own pain points from the perspective of this BOI, about 3 trillion naira bad loans or non-performing loans? What are their pain points? And then what kind of counseling have you given them? And then from the lesson learned so far from the beginning of this seminar, what can we deduce as a way forward in order to revamp our Moribund asset in this country?
Thank you very much, and good afternoon all. I will talk from the perspective of small businesses, especially in relations to microfinance banks. I've been working with quite a number of microfinance banks, and the story is not different, because the non-performing loans of Bank of Industry, if you look at the perspective from the microfinance banking industry, might be even higher or huge than that of Bank of Industry if you took the cumulative sum. And it is not far from the fact that some of the issues raised by Dr. Victor are evident as part of the reasons for the non-performing loans. You see, most of these borrowers, they have a kind of mindset about most of the funds they are taking from either Bank of Industry or microfinance banks based on some of the interventions the federal government have been churning out. For instance, like the Micro, Small and Medium Enterprise Development Fund, which was meant to empower small-scale businesses. And most of these borrowers look at them as, government largesse. So, as they are able to access funds from some of these institutions, they feel that they are not in any way, supposed to repay. So, and then most of the businesses don't have full knowledge of the business they are running. So you can see that the aspect of knowledge gap exists among the borrowers. So, and that is why, even in the microfinance perspective, it is mentioned that microfinance is not just banking, but is a development tool. So that means we need to create more time to educate these borrowers on how to manage their businesses to enable us reduce the level of non-performing loans within the system. And the issue of capacity is very important. And most of them, they come with maybe a loan request of 500,000. And you discover that what the business needs is 100,000. So if they overborrow, and it means that they are going to misuse the funds. So in this case, I am advocating that as turnaround managers in this country, we need to pay more detailed attention to some of these critical factors to enable us guide our clients very well to be able to manage these funds efficiently, and then we'll record high level of loan repayments to engender sustainability in the financial institutions we have in Nigeria. Even in commercial banks, the cases are not different. So I believe that with continuous education, with continuous mentoring to the clients of these institutions, we'll be able to reduce the number of non-performing loans in the country. Thank you.
Thank you. And to my sister, Madam Naomi. Hello?
Yes, sir.
Yes. What can you add to the comment from these two panelists?
Okay, I won't come from the financial angle. I want to look at the cultural mindset of the Nigerian entrepreneur. First of all, your human resource plays a very crucial role in the success of organization. In short, they are the lifeline of any organization. But we have the culture of, if I need a content media creator, I pick my niece or my nephew, regardless of if he's qualified or has the right certification to man that position. If I do that for all my key positions, definitely in the next few years, that company is going to run into crisis.
Okay.
That's one. Then two, we tend to wait till the last before we seek help. Like someone was saying, that at what time do you think you need to seek help? Dr. Gideon said it during his presentation that if you are not engaging social media right now, if it's not working for you, it's already working against you. The next COVID or pandemic will not happen in 100 years, it's 50 years. So you have to be on your toes constantly, and you move with the tide. You don't wait for it to happen. Have the right resource people, and at the same time, be future forward thinking. Don't think of the now. Think in the future tense.
Let me just put one question to you. From the financial perspective, as you said, we can see the springing up of financial inclusion drive in this country, most especially from the fintech perspective. We can see OPA, Moribund, that are driving business across the country. What can you say about the informal process or informal ways and manners in which chunks of these businesses are coming, and then there is no room or there's no awareness, despite the fact that the financial literacy is going up, but formalization is an issue of businesses?
So you mean the inflow of fintech?
Yes.
Positive or negative?
Positive.
Positive.
Yes.
I think one thing I think that they are doing right is reducing the process of business. Like before the advent of fintechs, when you want to pay or you transfer money, it takes 24 hours, 48 hours before it reflects. But when the fintechs came, as you are transferring the money to the market women, it's actually reflecting immediately. But when you use other older banks, it takes a while, even now. OPay, Moribund, if you go to any small business, medium scale business, they use these new fintechs, and it's working because they have cut the process. Although there's some element of risk attached to it, but all in all, it's working better, and they are moving with the tide. That's one thing.
Okay, let me come back to Dr. Dickey. As a consultant working directly with small and medium scale, that is the SMEs, you have likely witnessed a first-hand the moment when once a thriving SME is facing some challenges. Perhaps a retailer cannot pay his suppliers, manufacturer losing customers to cheaper import as alleged by the president, or service provider struggling with cash. From your own consulting experience, what are the most common early warning signs that an SME is heading to failure? And currently, what prevents SMEs owners from seeking help early? Is it lack of awareness as alleged by Madam Naomi, or fear of creditors, or simply not knowing where to turn? More importantly, when do you intervene? What are the practical low-cost turnaround strategies that actually work for our business within the limited resources? Business that cannot afford the big four consultants or sophistication restriction advisors. Can you share a specific example? Thank you.
That's quite loaded. The signals for business failure are usually there. One key one will be you see issues around working capital and inability to meet obligations. Like a typical human person, medical doctors will tell you that when you have headache, it's not just that headache. The headache is telling you that there might be other symptoms. But for a business, the SME you referenced, stress around working capital is usually a signal that something might not be going right. Then immediately you then look at what's the trend of the sales. And these days, SMEs are more able to use basic tools to manage their cash flows. So tendency around difficulty in paying salaries, low volume of sales. The low volume of sales might be as a result of competitors actually managing their own clients better. And you see that these target SMEs, the sales level might be dropping. Added to that will be, to what extent is the business recovering its costs? A major assumption or mistake SMEs tend to make is selling at the other person's price. And there's the challenge of effectively costing their products. I will give you an example. If we look at let me look at agriculture. If you look at the catfish, a lot of people have fish farms. And when you ask them, how much are you selling? They will say they are selling at X naira, because that's what the market is doing. If we sell below this price, they won't buy. We actually did a study and we said, let's take the profile of catfish farms in Nigeria. How many of them have operated successfully and profitably for 10 years? A number of people go into that business because the other person is doing that. All right, so selling at the right price is a key issue. Being able to know your costs and recover your costs, and ensuring that your costs includes your own salary, your rent, and all that. When you do that, you are able to better determine your costs. So, if the business is having issue around sales, it might be due to, yes, not managing their production line effectively, determining their cost. Then, the other bit about why don't businesses, or what constraints do businesses have regarding seeking immediate help? I think you said if it's due to pride or they are not sure of what, yes, you are right in that regard. business owners at times feel that if they consult or use consultants, it's an indication that they are not competent or they don't know what they are doing, which shouldn't be the case. We encourage business owners to know that the same way, like we said before, that you seek medical help, you should be able to seek the help of a business advisor. I went into, there's a medical facility I had gone into some time ago. Again, for turnaround managers like Dr. Gideon mentioned, you should be able to observe things easily. I recall that the last time I went into this hospital, the staff, the way they were working, you know that these are well-motivated people. Then subsequently that we visited them, if you are not very careful, it appears as if they will transfer their own sickness to you. You become more, are you getting it? So we were able to pick. And when we went in there and I spoke with a director there, that what's going on? I didn't see energy in your staff the way. He said, how did we notice? They've not actually been able to pay salaries. So what are we saying? As a turnaround manager, you go into an enterprise. The flowers in front of the building, if they are doing well, even the flowers will tell you, Madam, we are doing well here, all right? But when you go in there, how tidy the environment is will speak to what's going on behind there. Just like we used to say that if you go to the kitchen or you go to the bathroom somewhere, that can tell you what's going on. Business owners need to realize that they can easily consult. They need not be afraid. They need not be shy. There is no point waiting until the business has issues before you seek attention. And in seeking attention, it has to be regular. You need to periodically evaluate your business every 6 months. Talk to someone. I can tell you that the big corporations we see, the CEOs of companies that do well, they have consultants, they have advisors they call. And if we check our corporate governance code, for instance, in Nigeria and everywhere, directors, for even big corporations, directors are allowed to hire consultants or advisors paid for by the company. So the big companies we see their CEOs have someone they call regularly. Come, I want to take this decision. What do you think? You brainstorm. You can also reject that decision, but you get challenged around your thoughts if you have someone you talk to. So as business owners, you should have someone you talk to regularly, and we need to come to terms with that it does not mean you don't know what you are doing. And in fact, the more you easily open up, it demonstrates. We've seen it that those who know are those who seek more knowledge, is that not? And those who don't know, we always assume that they know a lot. So business owners seeking advice is something that should be routine.
Okay. You made mention of about pricing being one of the issues. How can you advise on a price war in an enterprise? Looking at the situation that is happening in the oil and gas space between Dangote and other marketers. You can see fluctuations on the pump price. Dangote can reduce the price, other players in the system can also reduce, or they jacked up, and then we can see inconsistency, but each and everyone want to face out the order. How do you, as a consultant, advise your firm on going into a price war as a strategy for survival?
Well, the game has changed. Before now, petrol was being imported, and a lot of the importers had tank farms, invested heavily in assets. The reality is that those assets can no longer yield the sort of revenues you were earning before. And what that means straight away is that you need to restructure, you need to change your business model. Those assets are likely idle now, so you need to do away with them as fast as possible. We did not go into the fact that, yes, I think Dr. Gidon mentioned that they are already late in that game. But the reality is that the market has changed. The market is dynamic. Markets are meant to be dynamic. So they need to change their business model. They need to cost the facts and realize that, look, this is what happens when we don't adapt. So adapting quickly is the way to go, and they can't continue assuming that Nigerians will pay for their fat.
Thank you, Dr. DK. Back to Dr. Gufab. From the macrofinance perspective, being a specialist on macrofinance, Nigerians SMEs constitute about 90% of Nigerian businesses. They contributed 50% of the national GDP. And they are the banks at the grassroots, which is the engine of our economic growth and development. How do you structure so businesses that you are dealing with, looking at the rate of mortality, most especially in family businesses and other normal businesses? You see, like mentioned by the president, family businesses in Nigeria mostly move to the second generation. Then what specifically things are we doing around that? Because from the grassroots, that is where it starts, and then move upward, that's sustained. Others get it right. Why are we not getting it right?
Thank you very much. I can give you a classical example with myself. You know, I grew up from a family that they practice agriculture. And like for some of us, we are many in the family, but you know, most of my brothers look at agri as something that has been inherited. You know, we inherited from our parents, and they are just doing it because they found themselves, you know, in that family, so they just have to practice agriculture. But for instance, growing up, I asked some few questions. You know, doing farming not as a business, it cannot give me the right prosperity I want to achieve in terms of, you know, being the kind of farmer I should be. So as a result of that, I've been able to like network with successful farmers, you know, study different models that will enable me to now compete favorably within the market space or within the agri space. And that has really broadened my scope in terms of the participation within the agricultural space. And that is why today I'm doing my farming in a very different way. I've gone into greenhouses, I've gone into livestock production, and even crop production. And one thing that may amaze you is that I learned about some best agri practices in terms of like maize production. And when I brought in that technology, I told my people that you can plant, the best way to plant maize is one seed per hole and within the right spacing. I was told that if I do it like this, I will not succeed. I told them, no problem. We should operate the farm side by side. Let's see the output. And I want to tell you that as I'm talking to you, most of the people within the community have copied the strategy because they have seen it working. So I believe that based on Dr. Stephen's presentation, it is very important for us to give a kind of mentorship to our siblings that are within the family space to really understand the dynamics of that business and let them cultivate that interest in the business. If not, they will look at it as something that, oh, it's my father that asked me to do it. It's not my interest. and that will not guarantee sustainability. And once the visionary is dead, the business naturally will go off. So we need to involve them in the process and let them see reasons why they can now support the business growth and learn more to ensure that that business moves to the next generation. I'll give you another example. I have a daughter. She's in class 5, primary 5. So I normally discuss with them about agriculture and health. But one thing, there was a day, she told me that she has planted watermelon. And she had gone to Google and check how many fruits can one seed produce. And she did a mathematical calculation. So if it produces 5 to 10 fruits, and she sells it this amount, she will likely get this amount. And her prediction is that it's easier to become a millionaire if you plant so number of seeds, you will get this amount of money. You can see that unconsciously she is getting into the space without too much of what, because she's assimilating into the process, you know, by encouragement. So my own standpoint is this. Once family businesses are ongoing, we should involve our younger generation into the process, and that will go a long way. Then another aspect is that you discover that in the family there are people that have no interest in that business. Can we allow it to die? The answer is no. Dr. Steve has answered that question. So in that case, we need to seek for qualified, experienced people to manage the process, and that will enable the businesses to, you know, to live beyond the vision of the business. And I believe that constant capacity building too can assist, because if we continue to seek for knowledge, you know, we can drive the system based on, you know, knowledge, and that will lead to efficiency within the system. So I believe that Nigeria, if we must make a headway, definitely most of these are smaller businesses may grow up to become bigger brands, and then without, you know, dying off within a short period of time, because it is very difficult for you to see an SME in Nigeria that lives beyond 5 years, if you look at some of the literatures we have, you know, in the country. So these are some of the just experience sharing that I want to do. There are quite a number of case studies that he presented, which we have seen. They are practical models. And what have we learned from those that have succeeded beyond the people that carry the vision from first, second to fourth generation, and those that have not lived beyond the second generation. So we need to bring these lessons together and see what led to the failures and what led to some of the successes, and we can build on that to ensure that we have a more robust system in Nigeria, because you rightly mentioned the backbone of our economy is driven by SMEs, or the small businesses in the country. Thank you.
Thank you. Still, Mr. Hagi, you made mention of agric, and in fact, you have gone deep into discussions on agric value chain. Agric value chain start from the market, but sustainability of agric start from the farm. For the fact that agric is one of the major occupations of Nigerians, and agri-produce support more than 60% of Nigerian industries. What, from your own perspective, can microfinance bank and other small SMEs can do in order to complement the output from our farms to support our manufacturing for sustainability and growth? We see the cost of production going high, and of course, which affects the pricing and then necessitates us to import some edible food from other countries. What do you think, from your own perspective, can TMA do, or to go into the farming to see that we sustain this? Because our aim is to turn around Moribund asset, and most of these Moribund assets use agri-produce as their own raw material. What, in your own perspective, can you do from the microfinance perspective to the SMEs in order to have a value chain that is growing and supportive?
Well, thank you very much. Before I answer your question, I need to draw you back to the fact that agriculture is one of the most riskiest businesses or business that you can run, because it is exposed to a lot of vulnerabilities in terms of the production processes, pests and diseases and all whatnot, and market volatility in terms of prices. So that is why, if you look at the financing model for microfinance banks to, finance the agri value chain, especially from the production side, is always challenging, because, in fact, the uncertainties are very high. And that is why in some forums that we have advocated that most of the value chain activities should be ensured, so that banks will have the comfort to lend to the agri sector. So having said that, it is very important for us to also know that today the agri sector is facing quite a lot of challenges in terms of the high input cost and then the fall in the agri produce prices. So that is another challenge for the microfinance bank in terms of funding. Now, the farmer gets a loan at the rate of, let's say, 15% or 20%, and to produce, then the cost of input is very high. Now, the price of farm produce are very low. So I think in the turnaround association, what we should be looking at is how can we now turn these primary producers to people that can add value to what they produce, so that they will not be at the mercy of the middlemen within the system. Because if they will not be able to add value to what they are producing, it's very difficult for them to even break even. So we should look at how we can now link these farmers to maybe processing opportunities that will enable them to add value. And by doing that, farmers can be empowered to really produce, and the banks will be at the comfort to really lend to them because of the post-harvest losses they are facing. For instance, I talk about watermelon. If you harvest watermelon today, after 3 days you have not been able to sell it to the market. You know, the same thing with tomato, the same thing with strawberry that is produced in Jos. In fact, if they harvest strawberry today and they are not able to sell it before next tomorrow, the case is a sorry situation for the farmer. So I can see that there have been quite a number of good interventions by the federal government in order to mitigate some of these challenges. So like the NISAL option that was brought up by the federal government to really direct the lending to agricultural sector, to encourage banks to lend to the sector. I feel that the turnaround managers as an association, we should be able to look at how can we lobby the government through some of these institutions to really carry out their assignments adequately to ensure that the microfinance banks are covered to lend to the agri sector. And that will boost production within the system to an extent that we encourage high production and also create the right impact within the system. Thank you.
Thank you. Let me go to Dr. Naomi. In addition to answers from Dr. Kudab, how do you look at value chain finance as a solution or as one of the strategies for turnaround? He made mention of farmers that are producing, but the cost of production and so on is on the high side that they cannot compete themselves. And then secondly, banks' appetite are not financing the lower cadre of agriculture. Now, how do you structure a kind of value chain finance that can finance the farmers that are going to supply to the manufacturers so that we can revive these our moribund industries?
Thank you very much, sir. In addition to what he has said, let me pick it up from there. He said the major issue is the issue of the produce getting bad, getting spoiled. So majority of the cost is lost. First of all, if turnaround management can liaise with the government like NANSA to reduce the interest for farmers, to make it more accessible to them. NANSA is doing that, but I think other organizations can do more of that. That would help a bit. Now, when they get access to that loan, they have planted and they have harvested, they should have ready off-takers. That's one solution. Second solution would be farmers should not just end as farmers. Once they go a step further, the value of their produce becomes higher. That strawberry you have picked, if you pack it in some way, the price shoots up immediately. Even yam in Ghana is sold in boxes and is exported to other countries, and the value triples just because of that stage. Same thing goes for cassava. When you harvest cassava, you have to process immediately, or else it will go bad. But there's a way you process. You bring out different raw materials from it. You as the farmer, the banks should enable the farmers to be able to do that, or help them partner with other off-takers that can do that. So the risk of the thing going bad would not be there. As you are harvesting, you are passing on to the off-taker or the processor, and they are adding more value, thereby increasing what comes to the farmer. And that enables the farmer to be able to pay the loan easily. That is like the value chain. Another thing is to remove the middlemen as much as possible. And like I said initially, if the farmers themselves were given some training on how to preserve their produce, so it doesn't go bad 2-3 days. If Farmer A harvests tomatoes and passes it to Farmer B will not plant. All you will do is probably sun dry or something. So that process that somebody else would take and make more out of you, you would keep that profit within the Farmers Association. And once you do, you want to say something, sir?
No, I'm just trying to make more light on this.
Okay.
If you look at the whole of this chain, finance is key.
Yeah.
Now, how do you structure something that I can take care of all these lapses? That is an additional question. And then secondly, just like we made mention of BOI, we are about, or the manufacturing in general, where 45% of the manufacturing industries are idle. So also from that perspective, if you look at the arable land we have in this country, and then the output, those land that are idle because of one challenge or the other are also close to that 40 or 45%. What can we do as financial experts, as a turnaround, to ensure that we have full utilization of our arable land from the financing perspective? And then we can see some case studies.
I think we can look at 2, 3 of that deeply. First is that when we say an asset is moribund, basically we are saying it's not providing the revenue stream, or it's not providing the service it was intended for. At the initiation of an asset or any infrastructure, you expect proper concept. It should have been properly conceptualized, right? And proving that this asset, this infrastructure, if you go into it and you complete it, it will be used for this, to achieve this purpose, to offer as a public good. One of the key reasons being budgetary constraints. Either we don't have the budget discipline really. So most of these assets, you see that they are assets that are, or infrastructure that are supposed to be budgeted for over a period of time that can get truncated. A number of projects that we have in Nigeria, you see that year 1 or year 0, there's budget for it. Second year, well, let me differentiate between having an item in the budget, because most items are actually in the budget, but the release of the fund is the issue, right? So second year or year 2 or 3, other priorities in the minds of the politicians come up. Secondly, the politics around it. If I'm Minister A today, I started this project, the next minister wants to be seen to do something new. So successive governments or successive executives choose different priorities. So we will need the appropriate legal framework to support project implementation to ensure that once commenced, these projects are completed. Then the other thing is the maintenance and management of projects. The refineries are easy to point at. We have a lot of dams in the north that are not working properly now because they've not been properly maintained. So maintenance is a key issue. And when you have assets in whatever form, whether they are fiscal assets or even intangible assets, you need to continuously see how you can ensure that they are still relevant technology-wise. Part of the problems of Port Harcourt refinery, people see is that even if you rehabilitate it now, can it compete? At what cost will the products come out? We have the steel industries that are out there. If you revamp them, technology has moved beyond what they were when they were built some decades back. So aside from effective management, being able to maintain them properly, regularly investing in the assets is an issue. We as a people will need to know that assets are valuable if you don't invest in them, and then the personnel managing those assets. How do we update ourselves to retain the capacity to effectively manage the assets? if you look at the typical budget of some ministries in Nigeria, you find out that the component around personnel, you expect a ministry that is meant to essentially provide infrastructure, fiscal infrastructure, maintain fiscal infrastructure, 80% of its budget is for the personnel. If we look at Ministry of Education, for instance, what percentage of the budget of the Ministry of Education is directed at the educational institutions? So do we use our budget to fund administrative structures, back office structures, or we use higher proportion of our budget to fund the service provision end? And when we talk of infrastructure, like Dr. Ogino pointed out, we are not just talking about physical items you can hold. It includes the intangibles. And it is the structures around the intangibles that define the health and condition of the physical assets. So we need to understand this and then be able to pay attention to the support structures that you need to manage the physical assets.
You made mention of legal framework and, of course, legislative support for TMA to thrive. Now, if we want to create a national SME yearly warning and support system through technology, as you said, networking, and other channels, what will need to be put in place for us to achieve that?
It's out there. It's been said that the SMEs constitute 70% of the businesses we have, which tells us that a very critical point to promote economic development is to pay serious attention to SMEs. That's obvious. Each time I hear primary government paying attention to primary health care, I said to myself, wonderful. Can we also have primary business care centers? In 1999, the World Bank SME department came up with a business support model, and they piloted it in Nigeria called STEP, Support and Training Entrepreneurship Program. Why did they do that? Because they felt that micro and small businesses were not having the necessary support in terms of advisory they needed. And the pilot was such that they put together fresh university graduates, trained them extensively to be able to provide business advisory and training to micro and small businesses. And a segment of that model was that you see these people, what we are called foot soldiers, going into markets, advising market men and women on how to run their businesses better. And that went on for some years. We would think that our local government offices should be able to set up business clinics and have this in, if possible, that is, if it's a priority, we can have desks in big markets where market men and women can go for consultation. And we need to realize that, of course, as turnaround managers, you guys know that why you are bothered, why are we bothered about whether businesses do well? Because each business that thrives creates employment. each business that thrives help our social environment, social security. All right? So we should all be concerned about, we should all feel pained when any business fails. So it's important for the local governments to start doing that. The more we do that at every level, the more we have successes around micro and small businesses. I can see you're pointing attention to that.
Yes, thank you, Doctor. Let me take this discussion further to Mr. Gutab. You made mention in your own statement about enlightenment and other things, just as the support mechanism or system mentioned by Dr. Dickey. How do you see TMA collaborating with SMIDAN, NACI, and other related organizations in order to inculcate the turnaround spirit to address issues of SMEs mortality, which is on the high rate?
Very good question. You see, in the space of capacity development of our SMEs, all these institutions you have mentioned, they have their specific job functions. And even if they are trying to develop capacity, it's inadequate. In terms of spread and in terms of the population of SMEs we have in Nigeria. So it's a very big space that TMA needs to come in order to partner with these bodies, both financial institutions and organizations like associations in capacity building. Let me give you an example. You see, like the NACI, like AFAN, that's All Farmers Association, and other bodies, they need a kind of hand-holding and capacity building on best practices. And if we don't want most of our businesses to fail, as Dr. Ogidon rightly pointed out, we don't need to be reactive. We need to be proactive. And that means this capacity development needs to be part of the routine of these institutions so that our businesses will get it right. And instead for us to now wait till they go under before we intervene, we'll now be reaching out to more successful and viable institutions in Nigeria. So in my submission, I want to say that, like at the state level, this NACI, they have branches, they have their national body, and then to an extent, they have even local government officials based on my interaction with them at the state level. Because I was fortunate to head an SME agency on the plateau, and we had quite a number of interactions with NACI, NASME, and others. So I believe that if we can lobby these organizations or associations from the national level down to subnational, and they understand the value we are coming on board with, which will be a kind of a solution-based intervention that will support their growth and development, I believe that they will be able to embrace it. You know, we have tested some models in terms of relating with some of these associations. And you know, the general perspective is that people feel that small-scale businesses cannot pay for consultancy services. But to an extent, it's not true. They can pay when they know that there is a value that they are going to drive from the services you are going to render to them. So I want to strongly suggest that TMA should take an advocacy, maybe visit to the NACI National Executive, to the AFAN National Executive, to the NASME Executive, and then even design the curriculum that we need to really intervene in. And then we can prove to them that, yes, if they use these solutions, the businesses that their members are into will remain viable and sustainable. And I believe by doing that, we'll be able to sign an MOU with them, and we can embark on a continuous education for their members, which I believe will go a long way in sustaining our institutions from failing. Yes, thank you.
Thank you. So before we go to the audience, let me ask one question to Dr. Naomi. We cannot run away from finance. Looking at the books of most of these banks, you see non-performing assets constitute a chunk or that affected their productivity. It is not only about the banks. Anywhere you see non-performing asset, obviously it translates to loss of job, lower productivity, and negating our GDP. What do you think our regulators can do in order to inculcate or enforce TMA in the process of loan appraisal, processing, and disbursement, so that at least we have another safety, apart from the insurance and other companies that take mitigation, like this NISA that you mentioned, and others.
Okay, so first of all, finance is not the only issue. So when you give the loan out, management of that loan matters a lot. Who is going to manage the loan you have given to the SME? Even if they have the best structure, but they don't have the right personnel, that loan is going to go bad. So I want TMA not just to focus on the financial aspect alone or the structure. The people that would run the structure and manage the finance should be looked at. Round pegs should be fitted in round holes. Training. And like Dr. Guido said, you don't wait before you start. So you train the staffs, you train the employees before it is even needed. If you have the right people, the right accountant, the right advisors and everything, that loan won't go bad. The study case says something that those companies that are thriving, they have one advisor or somebody behind them they run to, but the company pays for them. Who pays for the SMEs?
Now, just let's take a case of this tax reform that we are in. Just as mentioned by the president, there is a way, a manner in which they can track your taxes. Now, is there anything that as a regulator they can enforce for us to track the performance of each and every loan disbursed so that we mitigate this moribund syndrome? Because any moribund facility or asset is a job loss. And we want to create jobs. We want to create opportunities. Nigeria is a bigger brother in Africa. If we get it right, other African countries are going to get it right. So what do you think? We can use technology to do that, but what is your own take?
Thank you. You can use technology, and like Dr. Dike said, when you say a thriving organization, it will speak to you that I'm thriving. So when they come to get the loan, even if they try to butter and package, there's always a paper trail that you can follow. And if the paper trail points to the fact that, oh, they are healthy and everything, and they can actually get the loan, after getting the loan, disbursement and how it is managed.
So thank you, Dr. Naomi. I think we need to go to the audience.
Okay.
Okay. Good afternoon, everybody. Can you hear me?
Yes.
All right. My name is Ndubisi Enechianya. I want to comment from a different perspective. You know, when we say moribund assets, particularly in the private sector, in my opinion and my experience, a lot of these moribund assets arise by banks being in a hurry to recover their monies. Some areas have intervened and the banks have been a bit sympathetic, and I don't know what to use, but the banks have taken their time to say, okay, let's see how this works. The companies have gradually come back to life and been able to take care of the facilities subsequently. So one of the takeaways I would like us to have from this engagement is, how do we convince banks? Because the bankers, once a man is not paying, the banker's first instinct is go in and recover the assets. And a lot of times everybody loses from that go in and recover the assets. Because a lot of times it's not even easy to recover those assets. We end up in courts, we spend a lot of money, you know, for lawyers and co, and then it takes 3 or 5 years down the line. At the end of the day, even when the court says take over the assets, you can't take it over profitably. So you lose, the customer loses. How do we as TMA sensitize our banks into not being in a hurry to run in and take over assets because the customers cannot service the obligation? Because we're all agreeing that most times the problem is not money. And from my own personal experience, most times the problem is not money. So if the problems are not money, how do we get the banks to at least tweak their mentality a bit and say, okay, if the problems are not money, can we tarry a bit? Maybe we need to do advocacy like one of the doctors said. We can do advocacy to CBN, to CIBN, but TMA is something that must come to stay for us to, you know, move forward in our financial, to meet our financial. This forum, what do we do? And that is a question for the panelists, and maybe a question for tomorrow when we start, when we set up the structure for, I see tomorrow there's something that says resolutions and action points. Is there something we can do? Is there a way we can find to sensitize our banks so that they won't be in a hurry to move in and close down these organizations that can't meet their obligation?
Before you respond.
Okay.
I had a full comment to that.
Okay.
Okay, sorry. All right. So I was thinking, because I was technical advisor at Council. When we started there was very little interest with banks on non-oil exports. What we found was every bank you went to, talk about oil and gas, they knew they had desk officers for that, you know. But when it came to non-oil, they had no business, didn't understand. So we decided to approach the banks. We spoke to Fidelity Bank and we spoke to Zenith Bank. Eventually, we ran a program with Lagos Business School, Fidelity Bank, and today Fidelity Bank has taken off with non-oil exports. They're the biggest name in non-oil exports now in banking. Zenith too, they've had conferences and all of that, summits and all of that on non-oil. So my thinking is this: how well do the banks understand the businesses of these people these SMEs and all of these companies that are supposed to be giving loans to? Some just want to meet their loan targets, so they give the loan without really understanding the intricacies of those small businesses. So in terms of our advocacy, it should be that maybe working to help them or get them into the consciousness of understanding the businesses of the people they're supposed to be giving loans to. And then, like Dr. Steve said during his presentation, prevention is better than cure. Some people say teaching time saves 9. So all of the things that need to be in place in order for these places not to go moribund. So let's even try and work this out before it becomes a problem. So these are the things we can take onto the table for negotiation with the banks, as a way. The other thing was Dr. Gupta, right? Talked about sorry, yeah, talked about some interventions from government and all of that. There's quite a bit that the government has done. We have SMIDAN, ITF, there's the MSME Survival Program that cost, it was 150 billion naira. Bank of Agric, NAIC, and all of them. So you have agencies, you have interventions that really should be supporting SMEs, supporting agriculture. So even before we go to the farmers themselves, what programs do these people have to help their beneficiaries? Because if they can strengthen them from their end, it's not just us going to train them, but from that side of the room, of the divide, what are their policies? So maybe that is the advocacy TMA needs to have, and then to position ourselves as that body that can help them do this.
Thank you, Maureen, for any. All right, I can see one. Okay.
The topic is reviving moribund assets. I don't know, there's a perspective of a challenge that we also face as lenders in the financial sector with the advent of the registration of companies by the Corporate Affairs Commission. And you all know that some of these companies pledged collateral in the name of the company to financial institutions. Because of most of them do not regular annual returns, and most of them have not been up to date with the current changes vis-a-vis the person with something that the person that has the highest stakeholding or shareholding to be nominated to file their position so that they can be the ones to provide their KYC to CAC. Now, in such a situation whereby there are assets pledged to these financial institutions, and you've not taken a receiver manager to file their appointments, or you've done that after these companies are deregistered, how do we recover those moribund assets? Because in some cases, these individuals may have been, they've changed location, or they've transited, they've been demised. It's posing a huge challenge recovering those assets. If one wants to even turn around the company, how do we begin? Thank you.
So, any further questions? Or can we take the three? Or should we? All right. Okay. Let's balance the agenda. Then.
Okay. Thank you very much. It's been an interesting session. I want us to look at this issue that is bedeviling our society these days, this issue of JAPA. What role do you think that TMA can play in probably, is it to organize now maybe a linkage where our sons and daughters that have found their way outside of this country and they are thriving, so to say. How can we, is there any role that TMA can play in making them probably look back and see how they can also help to use their resources, they have acquired over there to help us back home in this revival of moribund asset? Because we all know that MSMEs are the bedrock of any thriving economy. When you look at USA, you find out that there are lots of MSMEs that are really thriving and are making it. So I want TMA to probably look at that, link JACPA with revival of moribund assets. Thank you.
Thank you, Madam. So we go to the panelists. Doctor, yes. You are taking the first question? No. Okay. Basically about
how we should convince banks to be
yes,
to be more patient. Well, the issues are, I hope I can dimension them fully. First is that the banks need capacity to better understand the various sectors and businesses that come before them. A typical bank credit officer, bank manager, and even the top guys, I'm sure we can't count the number of sectors or the types of businesses we have in the country. And all these facilities, a typical branch is faced with minimum of 100 types of businesses that can come before the credit officer to present loan application. And when we are in the bank, Dr. Ogidon will confirm this. You as the top guy, we usually tell the loan officers, look, if I'm not approving this credit, it's an indication that you've been unable to transfer the customer's vision and mentality of his or her business. You've not been able to document that and present to us in management. So each time we turn down a loan where it's the accounts officer that is to be blamed, not necessarily the customer, because the customer will have explained to the account officer, the account officer puts all these things down, presents to the big boys who look at what you are presented and say, no, we can't do this. So while the account officer is there crying that I can't face this customer, you've not understood the business of the customer. That's why we are not approving. But when you step back, how many industries will that accounts officer understand very well? So there is that issue. One way out, which we must commend BOI for, and we hope as BOI engages consultants to support SMEs, that the team in BOI also seizes the opportunity to interact and get educated by the consultants. So banks should try as much as possible to adopt that model. So I talked about the World Bank SME project. I happen to have been the CEO, and one of the things we introduced then, we did that with Fidelity and Diamond Bank then, that for every loan you want to give out, ensure that that customer is properly trained on the business side of their business, the management side of their business. That would help improve loan performance. Speaking on the side of the bankers, you know that the monies, banks want to lend, they want to make money, they want to make profits, but they don't want to lose your money with them. Every bank wants to, the banks, when you talk to them, the money is in the strong room, the money is with CBN doing nothing. But they can lend at 20%, 25% and generate profit. What's their fear? You are a Nigerian, how credible are you? That's the thing, the bankers want to lend. So it's for the banks to get that assurance that yes, we as Nigerians Elsewhere, people lend without collaterals, is that not? The typical Nigerian, if you lend a typical Nigerian your money, will he pay back? No. I will share an experience briefly. As a branch manager, a friend of mine came, needed a loan, and I looked at this and I said, no, it's not possible. We can't do this loan. As I was seeing him off, he wasn't happy, of course. I saw another friend sitting, waiting for me. And both of them chatted, and he said, come, see this Victor is refusing to lend money to me. And that one came, oh boy, give him this loan and he'll pay back. And I said to him, are you sure? He said, yes. Okay, that your 5 million naira you have as fixed deposit, will you use it to stand? I said, no, don't touch my money. So it's not that the banks are not. The other thing is that, I'm just trying to explain the position of the banks. Any loan that we said, let them be patient. We have reporting, the banks have reporting obligations. They need to provide for that loan. So if they give you additional time, provisions will be made for that loan. And once their shareholders' funds start dropping, CBN will say, this bank has failed. And that is the practice globally. So there is an extent to which the banks can say, we are waiting. They need to write it off in accordance with international financial reporting standards. So there are guidelines the banks must follow. So in summary, right, banks want to lend. They don't want to lose your money. That is why they keep saying you need to pay now. The other bit, we talked about legislative or legal frameworks. When people put down collaterals, banks don't have confidence around the liquidity or the value and the integrity of those collaterals because they cannot easily realize those collaterals to ensure that when you come for your deposit, they can pay back. So until we are able to, I think there is the movable collateral project the government is doing by which movable assets can also be used as collaterals. When we have all those structures and then de-risking, like what NISAL is supposed to be doing or is doing, right? If the loans are, you can de-risk the loans of banks, right? It makes it easier for bankers to lend so that you don't lose your deposits with them.
Thank you. Any further or any addition on the input? Oh, you are going to add more? So, okay. I think on this relating with banks, obviously it's a key thing that we need to do as a TMA. If we have credit bureau, where every lender is being keyed into that system to see credit worthiness of that particular entity, obviously TMA can also serve just as a kind of insurance, let me put it that way. The president made mention about the farm tanks that we have, most especially here in Lagos, that very soon they will be idle. Now, another trigger that we are about to see is our filling stations that cut across the country. With Dangote system of delivery, obviously we can see it clear in the next 5 months or 2 months. We can see changes. Most of these filling stations will be closed. Filling stations. In fact, I see some filling station placed for sales. Banks that lend to such also, they need to start rethinking. What do they do? Because it's not a competition, it's a disruption. So the second question is related to SMEs and other supporting organizations like SMEDAN, Bank of Agri, Bank of Industries, that lends at a single digit to farmers, most especially the farmers. I think Dr. Guta, you are to take this. So you made mention of banks not financing agri, but we have banks like Bank of Agri that obviously can do that, but it depends on how do they structure it. Then how are the farmers being structured? And then maybe after your decision, then I will also put an addition on something that I know some farmers they are doing currently. Thank you.
Thank you very much. The person that asked this question, you made mention of the fact that the non-oil sector, it looks less attractive to the banks. And there are institutions that are saddled with the responsibility of reaching out to the SMEs, which cut across the SMEDAN, ITF, Bank of Agric, we have the Bank of Industry and others, and the NISA. So what can we do as TMA to really take our programs to them to ensure that there is seamless synergy and sustainability within the sectors? It is very key because in most cases, if you are giving an intervention to a farmer or to an SME, which it is very clear to him that at the end of the intervention, he will be able to increase his capacity. But if there is no any benefit tangible that is placed on his table, it may not be too much attractive to him. So in that case, you see, like the Bank of Industry, which has been mentioned, they have engaged consultants that act on their behalf to provide hand-holding support to businesses, which is yielding quite a laudable result. So I want to say that institutions like SMEDAN, institutions like ITF, institutions like NISAL and others we should be able to place a proposal to them in a manner that will be very convincing. Let me give you a practical example from an experience. I told you I've been able to manage an SME agency in one of the states in Nigeria. And ITF is limited by scope or spread. So normally most of their interventions, they want to give capacity building to people on financial literacy, skills acquisition, and other programs. They rely on what we call master trainers. And in most cases, the master trainers are selected institutions that have proven characters and skills in those traits. So how we can come as a TMA is to develop a curriculum which is in line with that master trainer model. And in addition, by giving entrepreneurship trainings, financial literacy to the target beneficiaries of their program, and that will enable them to, look at our competencies, and they will be able to engage us to carry out that assignment on their behalf. ITF has that model. And for SMEDAN, we can develop a similar model, which will, if it is convincing, they will be able to even engage us, and also Bank of Agric. If you look at the non-performing loans in Bank of Agric, it is also huge compared to how it would have been. So that means there's a missing link somewhere. Farmers assess, but who is giving them the right capacity building, who is giving them hand-holding on best agricultural practices and all whatnot, that they will be able to imbibe to reduce the rate of loan losses. So these are some of the ways we can come in. And once we are able to consummate this partnership with these institutions, it will be easier for us to, like, you know, with the groups or associations, because we have an engagement. The institutions that are responsible for, you know, giving them benefits after the capacity building. And in that case, the institution may, and at the end of the day, if we are exiting from that agreement, you see that already the beneficiaries know that these people have the capacity. If they build our capacity, based on their relationship with the institutions, they will be able to get the interventions from them, which makes it easier. So I think these are some of the practical ways we can come in as an organization to assist in building the system. Thank you.
Do you, Dr. Naomi, do you want to add something on the question? Something on the question?
Okay.
For the last, okay, before we go that, let me make a comment. You see, all this Medan, Bank of Agri, and others, the main issue is what the president said, issue of capacity. If you look at Bank of Agri as at now, look at the staffing, look at the IT infrastructure, obviously there are challenges. Find it difficult to go into agri at the lower bottom, obviously, that one too, that capacity is lacking. So just as you suggested, you are a youth consultant. All these institutions, Medan, Bank of Agri are also supposed to adopt, just as suggested by Dr. DK. That is our belief, if really we want to move this country ahead. Because bank workers, they have limited is related to
currently they are deregistered by the CAC, and the assets that were pledged are in the name of the company. And in some situations, they don't file annual returns. So, you know, this company, Moribund, how do we turn them around? You know, since sometimes the two challenges are, one, they don't pay annual returns, they are now deregistered by CAC, and thirdly, sometimes the promoters are either too aged or they've demised. Those are the challenges. How do we turn the company around? Being that we have maybe factory assets, debentures, or legal mortgages in place.
I think Doctor, yes, this is a presidential question.
No, you see, some of the issue is that we don't follow the rules in this country. If people follow the rules, a company that, I will give you an example in other countries, Angola, South Africa, even Zimbabwe. If a company fails to file returns, within 3 days you are deregistered. The moment you are deregistered, then your bank account is closed, is linked, is closed, you cannot operate that bank account, everything is integrated. But a company that is not registered even with CAC in Nigeria will open bank account and be operating. Then you take a loan from a bank, you are not paying back, you pledge asset, you cannot do all those things. It is a complete ecosystem, and it has to be a all of a society approach, so that CAC should be able to be linked with the financial institution, and everybody, they call, South Africa calls something AOD, acknowledgement of debt. The moment you issue acknowledgement of debt and it is signed, any property that you have can be auctioned by the financial institution to recover the loan. So those are the kind of things that will make somebody not to even be. I know somebody in Canada who sold his house in South Africa to pay city of Joburg for the municipal tax. Because they said the moment you sign acknowledgement of debt, they will sell your house to pay the council that you are owing money you did not pay. And it is the council that is managing the water, managing electricity, managing the waste. So we need to canvass for all those kind of things to protect the financial institutions that have already given facility. Thank you very much.
Now, the second dilemma now is institution where that acknowledgement of debt, I might call it a demand letter in Nigeria, written to the company, either a proxy or a staff of the company acknowledges the demand letter. We will consider that as acknowledgement of debt to be able to go and repossess those properties. Then we'll go to court. The court will now tell us to go and reactivate the company at CAC for you to pay the returns on behalf of the debtor.
It's a major challenge with Nigerian regulatory environment. And CAC has been threatening to re-register companies, and they've not been able to do it for a very long time. And when they do it, they become so massive, 20,000, 50,000 companies at the same time, and then those things are not being done. Which I am aware that a whole lot of things are happening around that space now. And let this new tax law start next year, you will see the linkages, how everything will be linked with one another. Thank you very much.
Thank you, Mr. President. Back to Dr. Naomi on the last question. Or you want to say something about the...
Say something on... Yes, because I also think that for the problem that he's talking about, there needs to be some kind of advocacy between either CIBN and CAC. Because it's a major problem if you register a company that is owing. So I think there's a job for CIBN to do, you know, to talk to CAC and ensure that those companies, before you register them, there has to be a process around it. You know, because once you register them, it becomes very difficult to realize whatever they are owing. So I think for now, in spite of all the difficulties we have, or all the problems that Doctor talked about, this problem needs to be addressed by advocacy. CIBN needs to talk to CAC so that they will know that some companies they want to deregister are owing. Thank you.
Okay, Doctor, you want to say something?
Yes. Dr. Gideon's response actually triggered one or two things that, reminding all of us that outside Nigeria, if you are owing levies and taxes, they can sell your property to pay for those things. And in Nigeria, when you owe a bank, people will say, give us more time. It is somebody else's money. Before you go to the bank, you know you are taking a risk. Can I say something? Do you know that the banks that do well in Nigeria are the banks that don't lend? It's actually a sin to lend in Nigeria. Those, the banks doing well are the ones that don't lend. The ones that have issues are the ones that lend. And some people will say, we know the banks where to keep our money, we know the banks to go and borrow from. So when you borrow, you see lenders, borrowers asking for time. You bankers are wicked. It's somebody else's money. So if outside Nigeria, basic levies and council taxes, your properties can be sold. If you borrow and you pledge your assets, you took somebody else's money, there should be no excuse why you shouldn't pay. So I think that, just like Dr. Gideon said, if you have a company, if the law says file your returns, you must file your returns. So as TMA, as consultants, we should help to preach discipline and for people to do the right things. Because it's only when all of us do the right things, we are building a better country. The same way we challenge government and build stronger institutions. If the institutions are strong and all of us as individuals, we follow the rules, then we have minimal assets going bad. The suggestion I missed out the other time when I talked about capacity of banks and all that. One thing TMA can
everything is automated. So running such a thing is just as easy as they can. So I believe that one can be addressed. And then the other opportunity, just like you said, this value chain of a thing is very, very key in this moribund situation we are in. Unless we get it right, because it's just like a water pipe. Anywhere there's a leakage, we cannot get it 100%. Maureen made mention of what happened at the non-oil sector, what they do when banks are not ready to do that. Now you can see so many banks going into non-oil export because they started getting it right. And then one other thing we can see that even Nigerian banks, they were not getting it right on mining finance. And then now we started. Dr. Gutab, you can see a lot of activities in JOS. So obviously, that capacity building is key. And then one other areas Dr. Dike mentioned, which I believe, Mr. President, we need to look at it, is which sector is underfunded. Effective it is in the value chain so that we can deal with it. He made mention of this catfish farming. And then if you look at the value chain of it, and then our inability to finance it or underfunding it is causing a lot of issues. Our aim as TMA is to make sure that we have zero moribund enterprise or companies in Nigeria. So we're having some series of programs, seminars or webinars to address this. Thank you. So the last question about JAPA,
yes, sir.
Which to me is a talent lost for our country. We can even attribute it to the moribund situation we are in. But Dr. Naomi, you can elaborate further. Thank you.
So brain drain is a national issue, and it's not something that TMA alone can attack. But when turning around business, apart from advising the entrepreneurs on finance and all that, Iya Soji in Ibadan did not send Soji to UK or US. Soji was washing plates. That is why we have, 3 generations. But most of these businesses, they send their kids to Harvard. And you want that child to come back and take over that business. There's definitely going to be what? Brain drain. So when they are talking to these entrepreneurs, they should let them, 1 or 2 of your child, if you want them to take over, from the beginning, you cultivate that child. I know of a traditional man, no matter how bad your bone is broken, he's dead now, he's going to fix it. But he died, and none of the children, he sent his children out. One's a medical doctor. He could have taken over and expanded in another way, not in the small hut his father was using. But because the father was bent on that archaic, not embracing IT technology, he became moribund. But if he has been enlightened, okay, let's expand it like an hospital, get beds, get this, that child would probably have done what? Taking over, rather than go somewhere, which is also brain drain. The other aspect was, how do we get them to finance the, if you know that your dad's job is doing very well, your dad's company is doing very, very well, but you are not able to come, you would want to invest in it so you can get something back. So once you make it attractive, it's running, and these children can see, they would send something back to invest or come themselves as consultants. That's another way of giving back. Bring back that farming knowledge. Come for, even if it's 1 month as consultant, try to see what's not. Bring new ideas before going back. So that's a way of them bringing back, not them coming physically to stay. That might not be possible or visible in all small scale. So one thing I've said is make sure that no matter how small you are, have a child or 2 that you cultivate. Don't send them all to Harvard and expect them to come back and take over. That won't work. And then 2, as you are growing, the older generations, they are so fixed in what they are doing. They don't want to look beyond the box. This is how we have been doing it. We'll teach them to expand during the turnaround process. Let them see. I'm sure even when the Asoji was there, it was a small wooden table and chair. But now when you go there, it's nice, comfortable seats. It's even probably nice air condition, TV in the corner, music. That wasn't there. So he has seen beyond, and the mom actually allowed him to expand to fit into his own generation. So that way it won't become moribund.
Thank you, Dr. Naomi. In addition to what you have said, the truth is we need to appreciate our own country and our own people. The president made mention of Shegalunku. If you see Shegalunku is somebody, we cannot say he's not educated. He's educated in his own way, but not in a formal way you can imagine. Now, look at the way and manner he was growing and developing his own businesses. This can tell us that there is a gap between our educational attainment and our appreciation of our native intelligence. Our people are so intelligent enough, but we cannot see it because they don't have the degree. That is the only way we measure how intelligence is. But if we can leverage on them, a lot of things can happen. It's not only Shegalunku, Mr. President. We have a lot of them. The man that has the biggest rice mill in Nigeria, which is Gerawa rice mill, is an almajiri. He was an almajiri. And then you need to go and see his expansion. Then we need to have a routine and say, how do we marry our degree certificate? And then bridging with these natives so that we can tap from their own intelligence. Thank you. So, Mr. Emma, we have Emma on the online. Are you with us, Emma?
Yes, good afternoon, sir.
Okay, thank you.
Good afternoon, sir. Good afternoon, panelists. Good afternoon, President. Please, can I be heard?
Yes, we are with you, Emma. But we cannot see your face.
Oh, no, I'm sorry. Okay. Hello, good afternoon, sir.
Afternoon, you look good.
I must confess that this has been a wonderful, wonderful discourse. Played by the keynotes given by Dr. Steve Odidon, and that was awesome. And I've been enjoying every comment made. But one of the participants made a statement, and I just wanted to chip in something when he said that the bank should be willing to tweak the approach towards recovery of bad loans. And one thing I want to say, which I believe in the keynotes given by Dr. Gidam, we've noticed that in Nigeria, when we have picked up what I call good statistical, what will I call it, data, and that's a major problem. Because most people go into business or they do business and they don't really have a good sound understanding about it. But they want to play with other people's money and they expect that by the time the business goes down south, the bank should understand. And we know when such thing keeps going on, most of the banking, the banking system, most of them will go underground and it will be a chaotic thing. What I'm trying to say here is that most of the time, clients are not transparent. Like you said about net oil, clients are not that transparent for banks to really help them. They keep covering, they keep manipulating, So how do we tweak? When ab initio, you are not that open to us to help you. So this is what I want to just add to that, because tweaking is not, it doesn't come back easy. I can give you tons of examples of customers that bank have lent money to, but they have failed to pay back, and at the point they are meant to pay back or come clean to the bank for assistance to make things that clear, they were not being sincere about it. From day one, they were siphoning the money, doing something else. They divert the money. So there are many things that bank might not be able to tweak on the surface, but there are few they might also be able to tweak. That's just what I want to contribute. Thank you very much. I hope I can be seen and I can be heard. Yes. I appreciate it. Thank you, Dr. Gambo.
Very clear. Thank you so much, Emma. So any comment on what Emma said, or we can just proceed? Okay, Doctor.
Well, I think that was really very beautiful. As he spoke, my mind went to all the moribund MFBs, microfinance banks. You know, and obviously that's a tough area to go into to want to revamp. Which brings me to the point Doctor made about MFBs going into agriculture. From experience, that's a no-go area for microfinance banks. But he immediately pointed attention to, it depends on where you now want to finance along that value chain. Probably not production because of the level of risks around there. I'm sure that's why he said, what part of the chain do you want to finance? Because if you go into production with all the risks, but yes, at the marketing end, probably you can look at that. But again, do microfinance banks have capacity to do agricultural finance? My sense is that what capacity do they themselves have? There are other areas they can go into. So as we advise them, we need to be clear that there are limitations in the capacity of microfinance banks to go to do that, so that we don't have more number of microfinance banks going down. I believe that's a very important point to be made.
So thank you so much, the panelists. We have heard a lot from you concerning the moribund asset in this country, both from the SME's perspective, the legal framework which we have touched. In fact, even from the private sector perspective, the financial sector too. Let me just ask one question that got to all the panelists in 2 minutes, so that before we round up. Now, if Nigeria were to create a national turnaround and asset framework tomorrow, what will be the 3 most critical components? And what specific action steps can we take in the next 12 months to move from discussion to implementations? Let's go beyond policy rhetoric to concrete comment. Turnaround is about walking the talk. Let me start with Dr. Dike.
Sorry. Well, I think that a very, very critical component, again, is the legal framework around public infrastructure and government assets. We know what happened to concessions that were done by government. Some of those concessions, the concessions agreements were cancelled by subsequent governments. So until we must be able to have a framework that compels government to obey contracts and stick to contracts. You cannot have serious investors do business, or anyone at all who knows how to use calculator to calculate returns, go into a contract where the other party can feel that he's the big brother, he can cancel your contract. We've all have experienced it in various forms. I have experienced a situation where a phone call was used to cancel our contract. Mere phone call, they didn't put it in writing, because they know you cannot take government to court. Even if you do, you are there forever. So until we have legislative framework where parties are equal the moment we sign contracts, we are bound by the provisions of the contracts. Lagos-Ibadan Expressway was concession to a company, another government came and cancelled it. So any serious party that wants to relate with government, even the banks are not, the moment you bring a public sector transaction to banks, they say, no way. Because you are dealing with an invisible person and nobody wants to do that. So, legislative framework, very important, that if you get that right, then businessmen will know that, yes, I can take up these assets. And aside from that, even the moribund assets, who says that if this government sells this to you, the other government can come back and take it back from you? So let me hold on to that point while I allow others, since you said 2 minutes.
Okay, thank you very much. So, in addition, in my own opinion, as a turnaround management organization, we should also try to look at the realities on ground. You know, if we must move forward, we should be able to know where we are starting from, and so that if we are able to make some progress, we should be able to measure it. So if it will be possible for us as an association to take a quick snap of the landscape of the moribund assets in Nigeria, it will be very important as an entry point. And that will enable us to speak with facts, whether we are discussing with partners, whether we are discussing with government, or whether we are discussing with investors that are trying to invest in the industry. And that will enable us to bring up good solutions that will enable us to solve some of these challenges. Thank you very much.
Major turnaround point is leadership. Leadership of the industry itself. Because from the head, it trickles down. The culture, the mindset of the leader goes a long way. So in turning around businesses, we shouldn't just look at the industry itself. Why it failed? Most times it stems from the head. Probably it was rigid, culture, is who no man, he passed the back door, he didn't go through the right, there's no structure, personnel. So they should try and look at it from that angle also, and not just the financial aspect. The human resource is also key. Thank you.
Thank you, distinguished guests. This has been more than a panel discussion. It is a strategic planning session for Nigerian economic future. Every moribund asset represents not just ideal capital, but unrealized potential. On behalf of TMA and the organizing committee, thank you for our panelists for their wisdom and all of you for your engagement and commitment. Let us continue this conversation in the corridors, in our workplace, and in policies as well. Thank you once again.
Thank you very much. Please, a round of applause to our panelists and our moderator, the Vice President North. Alaji Gambo. Yes. So it's been quite an interesting conversation so far. I hope you enjoyed it. Mr. Gambo, don't go too far. I know you gave... Okay. All right then. So we've had a few hours together where we have covered the objective, a little more about our sponsors for CAS, for sure. Announcing the surname that sounds like Adeniro. Yes. So very, very grateful to them. All our partners online and in the room, the organizers. Dr. Steve talked about turnaround management as a tool for economic prosperity in the face of global headwinds and local economic uncertainty, a case for local company transformation. He went through the whole range, the whole framework, a comprehensive, very comprehensive framework, and luckily he left us with his paper in prose, and I'm sure there are slides that will be shared to everybody again. So there's quite a lot to take in there, from the tools all the way to the case studies and all of them. Then we had a very engaging panel conversation, Reviving Moribund Assets for Economic Growth, the Role of Turnaround Management, where we had our panelists. The good thing about these conversations today is that people have come into the room and into this place to engage not just on theory, but on practical experience. Dr. Steve mentioned a restaurant that I had been in 30 years ago when I was in university, so back in Port Harcourt. So you can imagine how far and how wide the conversations were, deep and very enriching. So I hope that we've taken a lot from that. We've brought in the legal, we've brought in the human resources, finance, and all of that signals. But I think the best thing that, for me, a key takeaway is that you have to act fast. We have to be futuristic about the businesses and to think about generational growth, generational assets. So on that note, tomorrow starts at 10 o'clock. 10 o'clock. So tomorrow, the anchor for tomorrow, I won't be the anchor tomorrow, but somebody else will be anchoring and we'll take you through the program for tomorrow. But we have delayed lunch for a little bit because we had late tea break. So we're going to now close for lunch. Shall we close with the national anthem? Okay. Or tomorrow? Okay then. All right. So thank you everybody for coming, and see you tomorrow. Lunch is at Kuramo restaurant, is on your meal ticket, so we'll go there now and have some lunch, and we can continue the conversation informally. Thank you.